So guys, we are live. We are live. First of all, confirm me whether can you all hear me? Can you all see me properly or not? Whether audio video is correct or not. So guys, we are live. Okay, audio seems okay, video seems okay. Just give me a second. Yes, sir. Yes, sir. Yes, sir. Okay, ji. So, hello everybody and welcome to this full English CA Final Direct Taxes and International Taxation Power Batch, applicable for May 26 attempt and onwards. Before starting anything, let me know how are you all? How you all are doing? Whether doing good or not. First of all, tell us about you and then we can start. Meanwhile, let me brief you something about the batch. Then we can start studying. Of course, studying will take place. We will study. Of course, daily we have to study. But let us first understand the basics of the batch. Done, sir. Done, sir. Done, sir. How long this batch is going to last? See, my expectation is this batch is going to last nearly 80 to 85 hours. Plus minus 5 hours. Okay. We can finish. Oh, not good, sir. Not good. Oh my God. Why not good? Everything will be good. Don't worry. See, 80 to 85 hours I am expecting in this batch, plus minus 5 hours. We can extend some time. We can finish early as well. Don't worry about it at all. Sir, this implies how many lectures? Nearly 20 to 21 lectures. Last power batch we finished up in 21 lectures. So possibly in this power batch also we would take 21 lectures as well. Done, sir. That is easy. That is easy. Second thing. Sir, what material we are going to use? How much coverage we are going to cover? Arey Papa, why are you worrying? It's just first day now. Let's get to know each other first. Let's get to know each other first. Done, sir. Sir, how much coverage we are going to do? How much coverage? Sir, A category topic, B category topic, C category, all. 100% coverage we are going to do. Even these smaller topics like ICDS, even these smaller topics like latest development in international taxation, we cover in power batches. So you don't need to worry about coverage at all. Sir, are you sure you will be able to do? Arey Baba, have faith now. We will be doing that. Don't worry. In addition to that, are we going to solve question answers? Yes. 100 plus questions. Sir, 100 plus questions in class? Yes, we are going to solve. Yesterday only I have shared my open PDF. Open PDF for question bank. Entire question bank has been shared in the Telegram channel. You can visit my Telegram channel. Link is in the description. Out of this, I have selected super 100 questions. Super 100 questions are from this PDF only, question bank only. If you want separate PDF, I will be sharing separate PDF of the super 100 by mostly Tuesday. Mostly Tuesday, I will be sharing the super 100 PDF as well. Otherwise, all the questions are from the full-fledged question bank. You can refer that as well. In addition to that, in this power batch, I am planning to even write some answers with you all. Sir, write some answers. Are you sure that we will be able to write in class as well? I am sure. I am pretty sure that we will be able to write as well. I have a special method devised as to how to write the answers. I will present you as to how to write answers in exam so that you are well prepared for exam as well. Oh my God, sir. Oh my God. Oh my God, sir. Sir, for that matter, do we require any material? Of course. Of course, of course, of course. How you are going to study without material? You require a concept book. Any concept book would work which is amended by Finance Act 2025. If you have any concept book, if you have any faculties concept book which is amended by Finance Act 2025, that is going to work. You only need to just come. You just need to hear. Whatever extra is in your book, You can tell to me there is less like it is less likely to happen. But whatever extra I have in my book, I will ask you to write in your book, and our book will match at the batch end. So you don't need to worry about it at all. Any faculty's concept book would work. If you have, which is amended as per Finance Act 2025, it would work. Don't worry at all. Done, sir. Sir, question bank. Arey Baba, question bank, just follow mine. Just follow my question bank. I have circulated open PDF. You can refer that as well. This question bank is going to help you a lot. Done, sir. How we are going to solve MCQs? MCQs, sir. We are going to solve MCQs. See, ICI has released now 35 case studies. 35 case studies. For this video will be uploaded on YouTube. This will surely help you in understanding how do we solve MCQs. In addition to that, I am also preparing a small booklet for MCQs as well, in which past years exam papers have been analyzed and they have been amended as per current Finance Act, so that you have a bigger base for MCQs, bigger practice would be done. So I will be sharing that PDF as well with you. That will be also done on YouTube, so you don't need to worry about MCQs as well. That will also be taken care of. So this much. This is not the only thing. If I am giving you this much, I am expecting a target of 65 plus. 65 plus target should be there in your mind. Why I am saying that? Because in group 2, you have 3 subjects and third subject is IBS, and you are literally not aware as to what to do in IBS. So bare minimum in IBS we can expect 40, and upper end we are not sure how much we will be able to score. Therefore, entire onus is upon DT and IDT. That means at least 55 marks you require in DT, at least 55 marks you require in IDT, then only you will be left with IBS with 40 marks, So with the current status, IDT also seems to be unsure. We are not sure what is going to happen in IDT. Therefore, DT has to be the pallbearer. DT has to be the stronger one. You must target at least 65 plus in this upcoming attempt so that you don't have issue with aggregate. Are we ready for that? Are we ready for that? Yes, sir. We are absolutely ready. See, this batch is a two-way conversation. I am not just conversating alone. You have to participate on regular basis. Whenever I am saying anything, now you should be energetic enough in the morning. If you are seeing me energetic in this morning, now you should also be energetic. Sir, to equip you, I am providing you with some extra benefits. Some extra benefits, and this should not be revealed to an outsider. This should not be revealed. Yes, sir. Yes, sir. I am providing a test paper. Due to IBS, I lost this attempt. Don't worry, don't worry. This time it will be your attempt. See, one issue I have seen throughout. Whenever you attempt any mock test from any outside test, outside any vendor selling you test series, if you take that test series now, you will see that most of the questions that they ask in their mock test now is repeated from either question bank or past paper or from RTP, or they have been tweaked a bit. But if you have already solved these questions, that is easier to score in that mock test. But when you sit in exam, you see altogether newer questions. In that case, your marks are reduced substantially. So for that matter, now this time I am preparing a single full length test in which there would be some new questions, or if not new questions, old questions tweaked in that sense that it would take some effort for you to solve. And if you are able to solve that full length test now, you will be able to assess your performance well, and that mock test will be representative of exam. So this full length test will be conducted after power batch. And how it will be conducted, pata? We will be having a Google Meet session. I will be sitting as an invigilator. I will be sharing with you all the question paper. You have to write it from 2 to 5 p.m. as if you were writing that in exam. And after that, I will discuss the solution. So with this, now you will be prepared as to how do we write answers as well. You will be prepared with mock tests as well. So you don't need to worry about exam as well. And this is what I'm committing to all the Power Batch students. Sir, I will be providing this test series. Done, sir. In addition to that, if you have any doubt at any point of time, you can always ask me. It is not like whenever you ask, I am not even responding. It never happens. Just drop me a message. You will receive an answer within 24 hours. Within 24 hours, mostly within 2 or 3 hours, I respond. But it might take some more time if I'm occupied now. So you will get response within 24 hours. If you want to talk to me, just drop your mobile number or just give a missed call on the number that I will be giving. I will be giving you call back. Whenever you are worried about the subject, I'm always available. So you don't need to worry about the subject at all. This doubt support, this personalized guidance that I give with the Power Batch students now, this is something next level. This is going to help you really, really, really a lot. In addition to that, sir, whatever exercise is customary, I provide marathon support as well. If you are stuck how to revise what you have studied in Power Batch, we provide marathons as well. We will do marathons as well in this case. So we have multiple other resources that we will understand with the batch only. But sir, with all these, na, our target, our aim should be fixed. That is minimum 65 plus marks. Why 65 plus marks? Because we are not sure about IDT. We are not sure about IBS. So our pallbearer, the main pressure bearing subject should be DT. And we are aware that DT is scoring. DT is understandable. Everybody understands DT. Okay. It's just that we are a bit fearful about the subject now. So with this batch, your fear will fade away. Your fear will go away. Just you have to do certain things that I'm going to list down. Of course, I'm offering the best thing that I can do. So I also want something in return. Some things I want in return. I want 4 promises from you all. 4 promises. Just 4 promises. Can you all promise? Only 4 promises. Sir, since we are sitting in the morning time, I want now some active listening. There might be a few of you who must be sitting on bed and watching like this. There might be a few people who must be sitting like this and watching lectures. Mata Rani will not bless you. Mata Rani will not bless you with this manner. Just sit on a chair, sit on a stool, sit on a study table. Do not sit on bed. Remember. Do you know I am also right now sitting on a stool, a plastic stool. I am not sitting on a chair. I have made promise to myself that in this entire power batch, I will not sit on chair. If you see, there is no back support behind me. I am sitting on a plastic stool right now. So if I can make this promise to myself, can you make this promise to yourself that you will be active while listening? Whenever you are seated now, just do not sit in that comfortable pose where you tend to sleep. Okay? So one thing is clear, I want active listening because things are going to be faster. Second thing, daily practice question. The best part of the power batch. Best part of the power batch. Now, why it is the best part? Understand. What personally I have seen at CFN level, people are not able to write things. So I have made this compulsory in this batch. What I have made compulsory? I will give you a question on daily basis. A trickier question, a difficult question on daily basis. That means for 21 days, we'll have 21 questions. In these 21 questions, you have to write these questions. You have to write these questions the way you would write these questions in exam, not the way you write in yourself. No, the way you scribble, that is not the way you have to write. You have to write the way you would write this in exam. And you will share this to me on my Telegram number. I will be sharing this number towards the end of the session. But remember, this daily practice is a must-do thing. On daily basis, you will get the feedback as to how to improve. You would understand as to how to change your answers. So for that matter, now these DPQs are indeed the essence of the power patch. Somebody who is watching this lecture as recorded, even if you are watching this lecture recorded, now do share DPQs on daily basis with me. You will find yourself at next level. Your understanding would change. Your knowledge would change, your writing pattern would change, and your hands will not stuck in exam. So this daily practice question is a little promise I want from all of you. You have to write these questions on 21 days. I can guarantee those who write all 21 questions, now they will be very, very, very close to exemption. I have seen this in past. People who have been writing DPQs are able to process things in exam, are able to write things in exam without any handbrake. So this daily practice question is the second promise I require. I want no excuses attached. Third thing, of course, make a notebook, a small notebook where you can scribble down some things. I will be requesting you to make some charts sometimes. Otherwise, all the charts have been given in the book. I will also give you time to take a screenshot as well. But some things now you should scribble down as well so that you are always awake. Some topics, of course, I never teach in that way that you will feel boring. Always you will feel energetic. But the fact is, if you have a notebook, now your retention would increase. So just scribble down things from the front and write DPQs at the back. So this notebook will fulfill dual cause. So maintain notebook. And second or last thing that I want from all of you is trust factor. See, at CA final level, you have this privilege to choose your faculty. The way you have chosen me for this batch is the same way that you would choose somebody else for a revision video. You would choose somebody else for question answer video. You would choose somebody else for MCQ video. Whatever I will teach, of course, I will teach the entire topics. I will teach the entire things. But when you will watch MCQ videos, you will see, oh, this is extra he's teaching. What if our regular teacher Rahul sir didn't teach everything? What if he missed out anything? Then you would start doubting the other faculty. You need to understand that every faculty is going to try to allure you. He's trying to snatch you. He'll try to get your attention. But the fact is, the more you will diversify your faculties now for a single subject, the more you will be able to, the more unable you will be at the time of exam. As a student, what I used to do, I used to follow one material religiously. What used to happen when I was sitting in exam, I used to recall the page number. I used to recall that it was page number 10, right side below, the answer was there. I was able to recall the pages in exam. But that is only possible when you follow religiously one material. If you have multiple materials, if you have multiple resources for a single subject now, what would happen? In exam, you won't be able to recall. This is very important thing, underestimated thing. But at exam, if you are not able to recall that page number, that image, if you are not able to draw them, it is less likely that you will be able to recall the answer. Got it? Sir, this is important factor. Trust is something really important for the entire batch. Whatever I will be teaching is the best thing that you can find in industry. Whatever doubt you have, I will be there to respond. Whatever content you want, just request me. I will be making it. I have been making English content throughout the years. If you want, just message me out. I will make video on that. If you want that, sir, this thing is not in your book, I will mention that this thing is at this place. Everything will be in your book. If you want some extra questions, I will provide you that. But just message me out. Instead of going to anywhere else, just message me out. I will be more than happy to make that content. And if you are able to fulfill all these 4 promises, now I can work 200%. 200% of your efforts for your attempt. Whatever efforts you are putting in, I will put twice the efforts as yours, just so that you can score well. Are we ready for that? Are we ready for target 61? Sorry, target 65. Target 65. Are we ready for that? Of course, sir. Of course, we are definitely ready. So these were some basic requisites. Till when we'll be able to complete the batch? Ideal target is 31st March. This is the target that I have kept for myself. 1 or 2 days might be okay. 1 or 2 more days, less days would be okay. But ideal target is 31st March. We should be able to do that. Promise, sir. Promise. Promise. How do we say promise? This is how you do. This is how you do. Or this is whatever it is. Promise, sir. Yes, sir. Yes, sir. We will do that. Done, sir. Let's understand the exam pattern first. Just let me go slow today. We'll catch the rhythm. Don't worry. Exam pattern. See, when you see paper 4, you have two parts. First part is MCQs. In MCQs, we have 4 segments. First of all is integrated case study 1, integrated case study 2, integrated case study 3, and leftover MCQs. Every case study is of 2 marks each into 3 questions or 4 questions, 2 marks each into 3 questions or 4 questions, 2 marks each into 4 questions or 5 questions. And leftover are 3 MCQs, 2 marks each into 3 MCQs. Overall, your MCQs would comprise 30 marks. Is there any pattern followed by ICI in MCQs? Is there any pattern? Let's check out. Yesterday only I released this exam pattern Is there any pattern followed by MCQs? Let me show you. This is May 24 examination, trust taxation, PGBP, IFOS, penalties, NR taxation, business trust. Okay. TDS, equalization levy, tax liability, MAT, NR taxation, trust taxation, transfer pricing, 43 CA, presumptive taxation. Okay. May 25, IFOS, deductions, assessment, appeals, trust taxation, transfer pricing, SFT, investment fund, buyback. Okay. Clubbing, TDS, capital gain. Sir, what are you trying to say? I am trying to say there is no fixed pattern for MCQs. The bottom line is you will not see a clear pattern for the MCQs. But one thing is for sure that nearly 4 to 6 marks would come from international taxation. 4 to 6 to 8 marks would come from international taxation, that is for sure, and that too from either transfer pricing or from NR taxation. Either from transfer pricing or NR taxation, you are bound to see questions. That is easy. That is easy. Okay. Remaining from direct taxes. This is what the pattern has been in MCQs, and this has been consistently followed by the ICI. What about other papers, sir? Descriptive part. How descriptive part has been? Sir, descriptive part is divided into two categories. Part 1 is compulsory question number 1. Compulsory. Part 1, that is this question number 1 is of 14 marks. In this, you are being asked PGBP. Very politely, it also asks you 115 BAA as well, BAB as well. Very politely. If examiner is very angry with you, he will also ask MAT. And this PGBP would always be of a company. In exam, you are less likely to see any other SSC other than company in question number 1. So we are pretty sure about question number 1. What about, sir, other question? From question number 2 to question number 6. Out of 5 questions, you have to attempt any 4. And each question is of 14 marks. Now, how distribution has been made? Let us understand. Question number 2A can be from any topic like cap gain. It can be from any topic like firm taxation or assessment of various entities. 2A is from any of the 3 chapters. But 2B is very fixed. It is always from non-resident taxation. Non-resident taxation. See, you don't need to write this anything. Take it. You don't need to write anything. Whatever things I am writing now, these board notes would be shared to you on the last day of the batch. I will share entire board notes from the last day of the batch. In between, you want something from the board notes, you can personally request to me on my Telegram channel. I will share that respective PDF with you. Otherwise, entire board notes what we are writing now will be shared to you on the last day of the batch. Some things you would require screenshots of that. You will be given screenshot of that in your Telegram group. So Telegram group is there. Whenever you will receive the access to the channel, access to the app, now you will also be given the access to the Telegram group. In that Telegram group, I will be sharing you whatever content you want. Done, sir. Question number 2B, we are clear. 2A, 2B, we are very much clear. Question number 3A. 3A is mostly from trust taxation. And 3B, you would see from double taxation avoidance agreement. Question number 4A. 4A is normally from TDS, TCS, and 4B is from transfer pricing. We have 5th question. 5A is mostly from assessment. It can also include DRC. It can also include miscellaneous provisions. It can also include appeals. 4 or 5 theoretical chapters compiled together would make question number 5A. And question number 5B would include BEPS, model tax conventions, tax treaties, and international development. Question number 6A would include tax audit. Question number 6B would include advance ruling. Question number 6C would include GAR. Sometimes they make question number 6D as well, which include miscellaneous provisions. This is how the set pattern has been followed by ICI. In past 5 attempts, this is the set pattern. If you can see this carefully, this is the entire 5 attempt pattern of each and every question have been listed down to you. If you want to analyze this PDF has been shared on my Telegram channel as well. You can refer this PDF as well whenever you require. Sir, We are very much clear with the pattern. What do we do of this pattern? Nothing. To be honest, is to be done with the pattern. So, sir, why are you discussing this pattern? Honestly, just to make sure that, just to ensure you that what we have to study, you should be focused. Your focus should be undivided. Huh? You should be aware of what should be studied, what should not be skipped, what should be skipped. Got it? Whatever chapters that are being asked in exam, that have to be thoroughly studied, because in these chapters you can be asked anything. But whatever the remaining chapters are, that are mostly to be prepared for the purpose of MCQ. So your understanding pattern, your study pattern would change for MCQs. Got it, sir. Got it, sir. Got it. These are some basic things. These are some basic things that we were required before starting the batch. Anybody having any doubt up to this point, in this point? If you have any doubt, you can message me. Otherwise, we can come on to book and we can start. This is the beautiful book. This is the beautiful book that we have made. The special part of this book now, just I'm telling you, whenever you start a chapter now, you will see a name written here. You will see a name written here. CA and blank space where you have to write your name. For example, we have Dia. So whenever you start a chapter a day before exam and you'll see your name before, you'll see CA before your name, and this is going to motivate you a lot. As a student, I was very worried about penalties chapter. I used to worry about that chapter a lot. And I used to write this CA Rahul Satija everywhere in my book. If you see my any book now, you would see that CA Rahul Satija has been scribbled everywhere. So this penalties chapter now, when I was very worried about this chapter, I was reluctant to take it. I saw my name. I saw CA Rahul Satija written on that. And because of which now I was motivated to take that chapter. So this is a small gesture you can do in your book. If you have space, you can do that. If you don't have space, find out some space. How much space it takes to write this thing. Do that. And this is going to help you a lot. Done, sir. Now, some basics, very irrelevant are basics, but understand. What are taxes? So taxes are nothing but unilateral finance charge. Whenever you pay something to the government and you don't get anything in return, that is taxes. Like your father and mother pay you pocket money and they expect nothing you in return. They expect nothing in return, and that is nothing but taxes. Done, sir. Any extra thing? Any extra thing? Nothing, sir. Nothing extra to be studied in taxes. But how does Government of India charges taxes? This is important from MCQ point of view. See, Constitution of India gives right to central government via entry 82 to tax income. Central government has the power to tax on income, to levy tax on income. This power has been given under entry 82. Can we remember this entry 82? Can we remember? Yes, sir, it is important because sometimes they might ask in MCQ. Very less likely to be asked, but if they ask, what if we will be left with no option now? So entry 82 under union list gives right to Government of India to charge taxes on income. Similarly, we have, as per state list, Government of India also gives the states, these Maharashtra, these Gujarat, these Rajasthan, these Kerala, these states are also having power to charge tax on agriculture income under entry 46. So central government under 82, state government under 46. Central government can charge taxes on income, state government can charge tax on agriculture. Do we have any agriculture tax? Right answer is we don't have agriculture tax right now. Done, sir. Done, sir. Done, sir. Done, sir. Now we have source of income tax laws. Let me take a minute to brief you this. Can you all tell me can you tell me, is there any difference between Income Tax Act versus income tax law? Is there any difference between the two? Or these two are bilkul synonymous? Income Tax Act versus income tax law are same thing or different thing? Sir, these two are different things. These are not same things. These are two different things. Sir, Income Tax Act 1961. It was the act enacted in Parliament. Or recently 2025. This is something that have been enacted in Parliament. This is Income Tax Act. Your member of Parliament would go to Parliament. He would come up with a bill, and this becomes act. This is what the procedure is. When you study act with income tax rules, 2000, not 2000, but 1962. In addition to that, When you study with CBDT or Ministry of Finance, circulars and notifications. In addition, you club with Finance Act 2024, Finance Act 2025. In addition to that, when you club it with Supreme Court or High Court judgments, all these 5 or 6 combined together would make income tax law. Act is something very small thing, but when you add act with clubs or act with rules, when you read rules along with circulars, notifications, when you read it with Finance Act, when you read it with High Court and Supreme Court judgments, so that this would become income tax law. Just a minute briefing to all these things. Sir, what are rules? See, whenever there are some numerical numbers to be given in the act are given in rules only. For example, depreciation rates have been given in rules. For example, valuation rules as to how do we value the assets have been given in rules. Sir, what are circulars? See, sometimes industry has have doubt. For example, there is a section called T206C versus there is section 194Q. Now, both the sections talk about the same thing in some senses. Now, which section would override, which section would underwrite is being given by the circular. Whatever circular that department issues now is binding on assessing officer. It is binding on assessing officer. That means every departmental officer has to follow the circular. But assessee can challenge these circulars. Sir, what are notifications? Notifications are nothing but, for example, there is extension of tax audit due date, there is extension of income tax return due date. So department issues certain notifications that are also to be read for understanding act. What is Finance Act? See, every year changing Income Tax Act is very tedious task. So government doesn't change Income Tax Act as a whole. They come up with a Finance Act every year. Every year it is a money bill. This aims to amend the Income Tax Act. Done, sir. Why Government of India comes up with Finance Act? That is less relevant, but understand. Government comes up with Finance Act because it is easier to present Finance Act. It is only required. It only requires approval at Lok Sabha. It does not require at Rajya Sabha. So for that matter, it is easier to amend. It is easier to pass this act. Then we have High Court, Supreme Court judgments. Do we have any judgments from ITAT? Right answer is no. At CA final level, we don't have any judgments from ITAT. All these 5 or 6 things clubbed together would make income tax law, and in act is just a small thing. Sir, which income tax act is applicable for us for your attempt now? For May 26, for September 26, and Jan 27. Sir, Income Tax Act 1961 is applicable and Income Tax Rules 1962 are applicable along with Finance Act 2025. Remember, do not get confused between any other topic. These 3 things are applicable for your attempt. Done, sir, done, sir, done, sir. Some basic definitions. Some basic definition. Now, sometimes I feel very small in telling these definitions. To CA final students, I'm telling this definition. Who is a person? Let's complete this quickly. Okay. Who is a person? Who is the person? Provision says any natural person like human, like man, woman is a person. Any Hindu undivided family is a person. Sir, any firm, partnership firm is a person. Partner LLP is a first person, and any kind of firm is also person. Any company, it can be Indian company, it can be a foreign company, it can be any other company, government company, small company, it is a kind of person. So any association of person, any body of individual is also a person. What is the difference between two? See, association of person is formed for a specific purpose, whereas body of individual is formed without any specific purpose. Whenever AOP is formed now, any person can be its member. For example, company can also become a member of AOP. For a partnership firm can become a member of AOP. But for body of individual, a company cannot become. This only comprises humans only. Got it? Difference between the two, AOP and BOI. Is it relevant? Personally, I don't think that is relevant. See, this is also kind of person, AOP and BOI. A local authority is also a person. For example, municipality, gram panchayat, these are also a person. And at last, whoever are left, whoever are not covered anywhere, like courts, like temples, like political parties, these are not covered anywhere now. So these are called artificial juridical person. Who are called person? Any Any individual, any HUF, any AOP, BOI, company, local authority, firm, and at last artificial juridical person. Why these persons are important? Because when these persons have liability to pay taxes under Income Tax Act, they become assessee. Any person liable to pay taxes under Income Tax Act become assessee. In addition to that, assessee also includes assessee in default. Assessee in default is also kind of assessee. We don't need to understand that. Literally, we don't need to understand that. When we will study this topic now later on, we will get this point. Okay. So these are a few people, these are few persons. When these persons have liability to pay income tax now, they would become assessee. Done, sir. Now, we have five terms. Let me take a minute to make you understand. We have five type of years. First of all is previous year. Then we have assessment year. Sometimes you would see financial year. Sometimes you would see calendar year. And there is a term popular worldwide. It is getting popular. It is called tax year. What are these terms? Just a minute. Calendar year is nothing but a year starting from 1st Jan 2025 to 31st December 2025. That means the calendar you follow is the calendar year. Is it anywhere relevant in your CA final syllabus? Right answer is no, it is not relevant to any. It is not relevant. Sir, tax year. Tax year is nothing but year starting from 1st April 2025 till 31st March 2026. The year in which you earn the income is nothing but tax year. The year in which you earn the income, year of earning is tax year. Okay. Is this relevant for you? Right answer is it is also not relevant for you because this is the term coined in Income Tax Act 2025. So next year when you will be studying the act, you will get this term, but right now it is not relevant for you at all. Sir, then we have financial year and previous year. Ideally, financial year and previous year mean the same thing. They mean the same thing, but financial year is used in real life, whereas in books you would see previous year. In books you will see questions from previous year only. What does previous year mean? Sir, previous year means year of income. Year of income. Whenever word previous year comes to you, it is year of income, the year in which you earn the income. Sir, for your attempt, previous year is previous year 25-26. That means whatever the income you earn from 1st April 2025 to 31st March 2026. 1st April 2025 to 31st March 2026. In this 1 year, whatever income you are going to earn, this is called. Yes, correct, Dia. This is called previous year 25-26. This is called previous year 25-26. Done, sir. My question to all of you, can this previous year be shorter? Can this previous year be shorter? This previous year commenced on 1st April 2025 and ended on 31st March 2026. Can this previous year be shorter? Right answer is yes, previous year can be shorter. For example, we have with us Dia. Okay. Dia is not doing anything right now. She's sitting at home watching the classes. But all of a sudden on 1st December 2025, she thought of starting a new startup. What she did is she made some scrunchies and she made an Instagram page and she started selling these scrunchies. And all of a sudden her business boomed. Provision says if somebody earns income or starts the business for the first time in between the year, then his previous year would commence from that date only. His previous year would commence from that day only. That means if you start a business in between the year, now your previous year would commence from that date. In this case, now previous year is 25-26, but it would commence for Dia on 1st December 2025 and end on 31st March 2026. Simple thing. Ideally, previous year starts on 1st April till 31st March. Okay. This is the year in which you earn the income. But can this previous year be shorter? Of course, sir, it can be shorter. In case you are starting business in between the year, so your previous year would start from that day, the day which start the business. Done, sir. We got this point. What is an assessment year? So last thing we are left with, what is an assessment year? Assessment year is the year of taxes. For example, for previous year 25-26, whatever income you earn from 1st April 2025 till 31st March 2026, you have to pay taxes in the next year. That means starting from 1st April 2026 to 31st March 2027. Whatever income you earn in previous year are being taxed in assessment year. As soon as previous year ends, assessment year starts. Done, sir. Done, done, sir. Done, sir. Sir, done. Bilkul, absolutely done. Previous year of the income, assessment year of taxes. But sir, are there any instances where government would tax in previous year only? Are there any instances where government can tax in previous year only? Right answer is yes. There are 5 instances. What are those 5 instances? See, what are those 5 instances? Understand. For example, you know, I was teaching. I was teaching beautifully in class. Everybody was loving it. Students are also enjoying this batch. Somebody, there is a girl. There is a girl in USA named Kamala. Named Kamala. No. Wait. There is a girl in Kamala. Kamala Harris. She liked my English a lot. This tutti frutti English she liked a lot. She loved. Kamala Harris says, I want to adopt this child. I want to adopt this child and ask my daughter to marry him. Kamala Harris wants me to marry her daughter. She made all the arrangements. She made all the arrangements. Did you get that? I, because of my English, got a marriage invitation from Kamala Harris's daughter. Oh wow. And I left India. Now just think of it that way. If I am leaving India, do you think that government will be able to charge taxes in next year? If I'm earning something in this year, previous year, 25-26, do you think that government will wait for next year to come if I'm leaving India? Why would I come to India? Why would I come to India? Why would I come to India? The provision says the same thing. Income of a person leaving for long duration without any intention of returning. If I leave India without any intention of returning, do you think that I would ever come back? So in this case, the government would charge taxes in previous year only. There is a point. अच्छी बातें. Sir, I passed group 1 but group 2 left just because of IBS. This time I will score 70 plus in DT and will take group gift from you. Love you. Can I say I love you? Can I say I love you? अच्छी बातें. Done. This time 70 plus. And certificate is waiting for you. Certificate, memento, whatever the thing is waiting for you. This is the first case because government will not wait for assessment year to come. Government will charge taxes in previous year only. Second thing, if you have a non-resident shipping company, see, there are certain shipping companies that come to India just once. For example, if a ship from Germany has come to India once and it would leave India, it would never come back to India. Do you think that whatever income the shipping company would make, government would wait for next year? There are certain shipping companies that come only once or very occasionally they come. For these companies, government don't wait for next year. Government charges taxes in previous year only. Got it, sir? This is the second case where government charges taxes in previous year. So ideally, income is earned in previous year, tax in assessment year. But in these two cases, government charges taxes in previous year only. Third thing. For example, one day I decided I want to do Bhandara. You understand Bhandara? I mean, I don't understand what we call in South India, but there is a term called Bhandara. Bhandara are nothing but langars, gathering where free food is offered. Religious food, I mean, in some religious gatherings, some free food is given, that is Bhandara. Like we have festivals in North India, like Durga Puja, we have Bhandara going on, Bhandara or whatever we call. I don't know what we call that in South India. But our colony people decided to throw a Bhandara, to give a Bhandara. Langar or whatever you say. I'm not getting that word, what you use in South India. But we decided to do Bhandara. Me, Rahul, Along with that, there have been 100 people who united, and we had a mission in our mind that we would feed 1 lakh people. 1 lakh people. For that matter, we went to every house. We went to every house that we can find. Annadanam in Kerala. Annadanam. Perfect. Annadanam. We decided to do Annadanam. For that matter, 100 people from the colony united and decided Annadanam. We also collected dan. We also collected charity. We also got some donation. 2 crore rupees donation we got. 2 crore donation we got. There was a festival. There was a festival, for example, Pongal. On Pongal, we did Annadanam. And our expenditure came out to be 1.4 crore rupees. We made a profit of 60 lakh rupees on this very religious point. On this religious occasion, we made a profit of 60 lakh rupees. As soon as we made the profit, now we all 100 people splitted these profit and went to home. Just understand this case. Do you think that government is going to wait for next year? We were made for a specific purpose. We became an association for a specific purpose, and that purpose has been fulfilled. Now everybody would set apart. Everybody would go away to their homes. Now in this case, do you think that government is going for next year? Government is going to wait for next year to tax all of us together. We would always be disintegrated. Now we would never unite again. We would never unite again. We have been formed for a specific purpose. Purpose has been fulfilled. Now where government is going to find us? So in this case, now provision says if there is an AOP that has been formed for a specific purpose, particular event, and that particular event has been fulfilled, in this case, government charges taxes in previous year only, not in assessment year, but in previous year only. Sir, in case of discontinued operations, see, if I have a running business and I all of a sudden discontinued that business, I have a running business and I discontinued that. Provision says in case of discontinuing business, government charges taxes in previous year only. They will not wait for assessment year. And at last, we have a point. Person trying to evade the taxes by transferring gas. All of a sudden, I was working well, I was teaching you. I got a phone call from department. Rahul sir, we are going to initiate proceedings against you. And what I decided to do, I decided to sell off my assets, take away the cash and transfer it to USA, transfer it to a foreign country. Provision says if department finds out anybody who is transferring the assets to escape the taxes now, in that case, government is not going to wait for next year to come, next year to charge capital gain. No, it is not going to wait. Whatever the income that has been found will be taxed in previous year only. So 5 instances I told you. Can you all say with me? Can you all say with me, sir, if you are any person who leaves India without any intention of coming back, in that case, you will be charged tax in previous year. If you are a non-resident shipping company, if you are a AOP which is formed for a specific purpose, if you do any discontinued operations, and in case you try to escape taxes by transferring the assets, in these 5 cases, government is not going to wait for assessment year. It is just going to charge taxes in previous year only. A standard question comes to my brain. Honestly, a standard question comes to my brain. For example, if I go from India to USA, for example, for my MBA, if I go to USA for MBA purposes, is government going to charge taxes in previous year? Right answer is no. It is important that if you leave India now, intention of coming back should not be there. If you leave for marriage, you are not going to come. But if you go for MBA now, if you go for your study purposes now, government assumes that you're going to return back. So in this case, government never charges taxes in previous year. Clear, sir? Clear, sir? Clear, sir? Clear, sir? Yes, sir. Yes, sir. Clear, sir. Clear, sir. Clear, sir. Clear, sir. Oh, wow. Done with the basics. See, this is a format. Of course, this format will be taken care of when we'll study the later part. But these were the basics. Are we clear? Who is SSC? What is the previous year? What is the assessment year? In what cases previous year can become assessment year? Now, what I'm going to tell you next, now, I want your attention for at least the next 2 minutes to 3 minutes, a full attention, a detailed attention. I want from all of you. Understand. When government wants to tax, this is the area where most people do something wrong. Most people do something wrong. Listen this point very carefully. Yeah? Government wants to tax. Government segregates the income. ठीक है? There are certain incomes taxed at special rates. For example, long-term capital gain under 112A. It is taxed at 12.5% over 1.25 lakh. We have long-term capital gain under section 112. It is being taxed at 12.5%. We have short-term capital gain under section 111A, taxed at 20% as of now. We have lottery winning. It is being taxed 30%. We have online gaming. So do we have online gaming? Yes, we do have online gaming. 30%. We have virtual digital asset taxed at 30%. We have unexplained income taxed at 60%. We have royalties and carbon credit taxed at 10%. These incomes are taxed at special rate across all the assessees. All the assessees. All the assessees. Whatever SSC you find now, if you have this special income, if they have this special incomes, they would be taxed according to this rate only, irrespective of their income size, irrespective of their status, they would be taxed with these special rates. But sir, whatever the general income is, that means other than these special income, whatever the income remains, this can be any business income, this can be any IFOS income, this can be any house property income, any other income, which is a general income, this is taxed on two options. Sir, it can be taxed as per old tax regime, and this can be taxed as per new tax regime. For individual, we have old regime as well and new as well. New regime is called 115 BAC. For individual, HUF, AOP, BOI. Artificial juridical person, we have old and new as well. For firm, we have old, we don't have new. For company, we have old. In new, we call it 115 BAA and BAB. For cooperative, we have old, we have new as well, 115 BAD and BAE. You can choose. Choice is to be made. Once you ascertain tax on special income and you ascertain tax on general income, whatever the taxes turn out to be, you are being added surcharge. You are being charged surcharge. Tax surcharge. How much surcharge? Sir, it depends upon which type of assessee you are. If you're individual HUF, then different surcharge. If you are a firm, then different surcharge. If you are a company, then different surcharge. If you are a cooperative, then different surcharge. And whatever the tax plus surcharge you arrive at, you are being charged 4% of education cess on the entire sum. This pattern has to be followed, otherwise on what figure you have to add surcharge, you are going to do absolutely wrong. Absolutely wrong you are going to do. Understand this point very carefully. Very, very carefully. Whenever you are going to charge taxes on any of the SSC now, his special incomes are to be segregated. His special incomes are to be separately considered. And this would be charged to taxes as per the respective sections. Whatever the general incomes are to be taxed based on type of regime he is opting. Done, sir. We will get a total of taxes, and on this taxes we have to add surcharge based on the type of SSC, and after adding surcharge we would add education cess on tax plus surcharge component. Clear to everybody? This has to be brought in mind that surcharge is only added after considering the entire taxes. Do not try adding surcharge on these incomes separately and these incomes separately. Do not do that. I have seen students doing this. This is a blunder that they do. Calculate taxes on these special incomes, calculate taxes on this general income, and then add surcharge to both of them together. And after adding surcharge, this 4% education cess is a blunder that nobody adds. In most of the digital evaluation, I have seen that they have forgot to add 4% education cess. Oh Baba, it is a not curable aparad. It is an aparad that is not curable. Nobody is going to forgive you for this. Sir, this is what we got. Firstly, we will understand the old tax regime. After studying PGBP, we will understand this 115 BAA series. First of all, we will have this old regime. After PGBP, we will study this new tax regime. Some portion of 115 BAC, I will brief you out. General tax rates, old regime, we are going to study. What is the general tax rate under old regime? Understand. If you are any individual HUF, AOP, BOI, artificial juridical person, if you are any individual HUF, AOP, BOI, artificial juridical person, sir, and your total income is up to 2.5 lakh rupees, then no tax. 2.5 lakh to 5 lakh, then 5% tax. 5 lakh to 10 lakh, 20% tax, and exceeding 10 lakh, it is 30% tax. I don't want to stress this at all. You are already aware of this. Sir, if you are a senior citizen, why I am senior citizen? I am not senior. Okay. If anybody is a senior citizen, plus he is an individual, plus he is a resident. Senior citizen, individual, and resident. Then up to 3 lakh, he won't be charged to taxes. Up to 3 lakh, no taxes. 3 lakh to 3 lakh to 5 lakh, he would be charged 5%. 5 lakh to 10 lakh, he would be charged 20%. And greater than 10 lakh, he would be charged 30%. Very simple point. Very simple point. See, normally up to 2.5 lakh, you have a basic exemption limit. But if you are senior citizen, that is 60 years of age or more, in that case, you have 3 lakh of basic exemption limit. No issue. Similarly, if you are a super senior citizen, that means 80 years of age or more, in that case, what would happen? Up to 5 lakh, you will not be charged to taxes. 5 lakh to 10 lakh, it is 20%, and exceeding 10 lakh, it is 30%. Basic things, sir, clear. I want 2 questions to be answered from all of you. See, this is an interactive batch. I want you all to participate in the question that I am going to ask. If you do not participate, I am saying Matarani is not going to bless you. There would be something wrong happening against you. You would be late for the office, and all of a sudden, the way you are about to enter the corridor, lift will go just before you enter. And you would have to climb 10 floors via just stairs. Remember, if you don't answer, this is going to happen against you. Just understand. For example, we have with us Dia. Dia is born on 1st May 1966. Again on 1st May 2026. She is celebrating her 60th birthday. She is celebrating her 60th birthday. Oh wow. Oh wow. Now, which slab rate would be applicable to her? Up to 2.5 lakh, no tax. This is the slab applicable. Or up to 3 lakh, this is the slab applicable. Which slab would be applicable to Dia? If she is celebrating her 60th birthday on 1st May 2026, which slab is applicable to Dia? Can you all answer? If she is celebrating her birthday on 1st May 2026, which slab is going to be applicable for her? So up to 2.5 lakh, no taxes, or up to 3 lakh, no taxes? Up to 2.5 lakh, no taxes, or up to 3 lakh, no taxes? Sir, ideally 2.5 lakh would be applicable to her. Why 2.5 lakh? Because for previous year 25-26, she was not 60. She was not 66. She was not 60. Yes. Yes. But if I change the data, no. For previous year 25-26, previous year 25-26, what the name is never top the beat. Satish Kumar, no. For previous year 25-26, previous year 25-26, she was not 60. She was not 60. She was 59 only. Are you getting this point? She was 59 only. If she was born on 1st May 1966 and she's celebrating birthday on 1st May 2026, that means in previous year 26-27 she is turning 60 now. In previous year 26-27 she is turning 60 now. That means for previous year 25-26 she was not 60. And since she was not 60, she would not get benefit of 3 lakh rupees. Got it? Sir, got this point. But if I change the data and say that Dia was born on 1st April 1966 and she was celebrating her birthday on 1st April 2026. Now, will she get benefit of 2.5 lakh or she will get benefit of 3 lakh? Up to 3 lakh no taxes, or up to 3 lakh, up to 2.5 lakh no taxes? Which benefit she is going to get? Which benefit she is going to get? Which benefit, which slab rate she is going to fall under? Oh wow, sir. Oh wow. Sir, in this case, she will get benefit of 3 lakh rupees. In this case, she is going to get benefit of 3 lakh rupees. Sir, why did she get 3 lakh benefit? Provision says, see, ideally, if you can say she is celebrating her birthday in previous year 26-27. She is celebrating her birthday on 26-27. But the fact is, she completed her age a day before. That means on 31st March 2026, she completed her age of 60. How can we say that? See, understand this with a pattern. For example, if this is a calendar year, you celebrate New Year on 1st Jan. You celebrate New Year on 1st Jan. Correct? Everybody celebrates New Year on 1st Jan. But sir, year is completed on 31st March only now. 31st December only. Completion of a year take place on 31st December. And therefore we celebrate New Year in 1st Jan. Similarly, she is celebrating her birthday on 1st April. But she must have completed age of 60 a day before, a day before only. Correct? Are you getting? New Year is celebrated a day before, on 1st January, but completion of year takes place on 31st December only now. Similarly, here she is celebrating her birthday on 1st April, but she has completed age of 60 a day before. That is on 31st March. Therefore, since she was 60 on 31st March, she would get benefit of 3 lakh rupees. I hope you got the point. ठीक है? ठीक है sir, ठीक है sir, ठीक है sir, ठीक है sir, ठीक है, got it. Will we be able to arrive taxes? I am giving you a point to solve. We have Dia who has income of 40 lakh rupees. Can you all calculate age 82? Can you all calculate the taxes? As per old regime, can you all calculate the taxes? Please calculate. Meanwhile, I am taking you further. Sir, how can we solve that? Up to 5 lakh, no tax. 5 lakh to 10 lakh, we have 20%, which is nothing but 1 lakh. Then exceeding 10 lakh up to 40 lakh, that means we have 30 lakh of income on which 30% taxes are applicable. Nothing, 9 lakhs. So 9 lakh plus 1 lakh, that is 10 lakh taxes would be applicable. Wow, sir. Wow, sir. Wow, sir. Wow. Once we arrive at the taxes, we have to add surcharge to it. So surcharge is important. It is technical, and people do mistake in this. Take it to follow these points carefully. If your total income is up to 50 lakh rupees now, whatever taxes you arrive is final. No surcharge added. If your total income is up to 50 lakh rupees, no surcharge is added. But sir, if your total income is more than 50 lakh rupees, up to 1 crore rupees, 10% surcharge. 10% surcharge on the taxes applicable to you. If your income is more than 1 crore up to 2 crore now, then 15% surcharge is applicable. If your income is more than 2 crore, wait, Papa, wait. If your income is more than 2 crore now, you have to do a bifurcation. Sir, what kind of bifurcation? Carefully listen to this point. Income more than 2 crore up to 5 crore now, you have to bifurcate the income. Dividend income, long-term capital gain and short-term capital gain are to be taken separately, and surcharge on this income would be 15% only. And if other income turns out to be up to 2 crore now, then 15% surcharge would be applicable. If other income turns out to be more than 2 crore, up to 5 crore, then 25% surcharge. If other income is more than 5 crore, then 37% surcharge is applicable. What did I say? What did I say? Up to 50 lakh, no surcharge. 50 lakh to 1 crore, 10% surcharge. 1 crore to 2 crore, 15% surcharge. If income exceeds 2 crore rupees, you have to do the bifurcation. Whatever the capital gain income is, whatever the dividend income is, maximum surcharge to such income would be 15%. And whatever the other income is, if it is up to 2 crore rupees, then 15%. 2 crore to 5 crore, then 25%. More than 5 crore, 37%. This is the surcharge slab you are going to fall. Let's do an activity. Let's do how much you understood. I have a set of questions that have to be answered. That have to be answered. That have to be answered. Everybody has to answer. Everybody has to answer in this point. Take it. This is an activity. The way you do it, you have done an MCS. You have done MCS, GMCS. You have done before exams. So this is the same activity you have to do. The way you do an MCS, the same you have to do. For example, we have Mr. Satish. Satish has the following income. Satish has income of 40 lakh rupees. He has income of 40 lakh rupees. How much surcharge would be applicable? Out of 40 lakh, he has been given a split. Dividend income, capital gain income is 15 lakh and other income is 25 lakh. How much surcharge would be applicable? How much surcharge would be applicable? Can you all answer? Can you all answer? How much surcharge would be applicable on this 40 lakh of income? Sir, let me answer this first question. You can answer. Sir, no surcharge. If income is up to 50 lakh rupees, no surcharges to be added. If income is up to 50 lakh rupees, no surcharge is applicable. No surcharge, yes. Never stop the beat says no surcharge. Dia says no surcharge. Never stop the beat says no surcharge. And Dia says no surcharge. Perfect. Second case. Sir, Satish has income. Satish says no surcharge. Second case. Income is 95 lakh rupees. Out of which capital gain dividend is 45 lakh rupees and other income is 50 lakh rupees. How much surcharge would be added? How much surcharge to the taxes would be added in this case? How much surcharge would be added? How much surcharge would be added? See, I will be waiting for you all. I will not proceed unless you respond. I will not proceed. Sir, how much surcharge would be added if total income is 95 lakh rupees? If we take the chart, if we see the chart, sir. Oh, never stop the beat says. Never stop the beat says 10%. Dia says 0/15%. Okay. Satish says 10%. Anybody else who wants to answer? Anybody else who wants to answer? See, you should participate in these topics. Okay? You should participate, so your sleep would go away. Sir, we are very much aware that if total income is up to 10 lakh rupees, if total income is if total income is up to 50 lakh rupees, no surcharge. If income exceeds 50 lakh up to 1 crore, flat 10% surcharge. Flat 10% surcharge would be added irrespective of the type of income. If it is cap gain, dividend, other income, special income, general income, extra, so whatever it is, if income is up to 2 crore, now we don't differentiate. Flat 10% would be added. Oh my God, sir. Oh my God. We got that point, sir. It is correct also. Now answer the third one. Answer the third one. We have a total income of 120 lakh rupees, out of which cap gain and dividend income is 55 lakh and other income is 65 lakh. How much surcharge would be added? How much surcharge would be added? Arey Baba, batao na. Arey Baba. We have total income of 120 lakh, out of which cap gain and dividend income is 55 lakh and other income is 65 lakh. How much surcharge would be added? How much surcharge? Sir, never stop the beat says 15%, 15%, 15%. Never stop the beat says 15%. Never stop the beat says 15%. Satish says 15%. What other people say? What other people say? Dia says 15%. What other people are doing? Other people are eating, sleeping. What you are doing? What other people are doing? Sir, we are just listening to you. We are not comfortable writing answers. Arey Baba, where you would take this what you say, this shyness, where you would take this, where you will take this shyness with to your office? No, sir. So why are you not responding? Always respond. This is going to help you only. The more mistakes you do here, the lesser mistakes you would do in exam. Okay. Sir, we are aware if total income is up to 50 lakh, no surcharge. 50 lakh to 1 crore, 10%. If income is more than 1 crore up to 2 crore, then surcharge would be 15% irrespective of the income. Yani 15 would be answer. So it matches. It matches. Wow, it is matching, sir. Fourth question. Sir, total income is 2.55 crore. Total income is 2.55 crore. Out of which cap gain income is 2.3 crore and other income is 15 lakh rupees. How much surcharge would be applicable on this dividend income, cap gain income? How much surcharge would be applicable on this other income? How much would be applicable? Never stop the beat says 15%. Never stop the beat says 15%, 15%, 15, 15, 15%. Oh, wow. What did I say? Total income is 2.55 crore. Out of which 2.3 is dividend and 25 lakh is the other income. How much surcharge would be applicable? How much surcharge would be applicable to each? Satish also says 15%. Dia says 15 oblique 25%. 15, 15, and Dia says 15 oblique 25%. Oh. What did I say? What did I ask you? What did I ask you? See, up to 50 lakh, no surcharge. 50 lakh to 1 crore, 10% surcharge. 1 crore to 2 crore, 15% surcharge. But if income exceeds 2 crore, if income exceeds 2 crore rupees, then what you have to do? You have to do the discrimination. You have to do the discrimination. You have to do the segregation. Whatever the dividend income, cap gain income is, maximum surcharge would be 15% only. So on this dividend and cap gain, surcharge would be 15%. And you have to check the other income as well. If other income is up to 2 crore rupees, then 15% surcharge. If other income is more than 2 up to 5 crore, then 25%. If other income is more than 5 crore, then 37%. Here, other income is 25 lakh only now. So 15% surcharge would be applicable. So 15, 15 is right answer. It is okay to do answers wrong here. It is okay. It is appreciable because the more mistakes you do, the lesser mistakes you would do in exam. Next question, sir. Next question. Next question for 7 rupees. 7 rupees, sir. What is the next question? 3.6 crore total income, out of which 1 crore is the cap gain and dividend income. 2.6 crore is the other income. What would be the surcharge applicable? What would be the surcharge applicable? What would be the surcharge applicable? Sir, dear, you were answering this question. Fifth one, you are answering. You are visionary. Okay. Never stop the beat says 25%. So what's your name? Never stop the beat. Never stop the beat. Never stop the beat says. Never stop the beat says 15 oblique 25%. Dia says 15 oblique 25%. Satish says 15 oblique 25%. The right answer is, sir, if your income exceeds 2 crore. No, I was wrong. No issue. Okay. Sir, if income exceeds 2 crore rupees, you have to do the bifurcation. Monica. Okay, Monica. If your income exceeds 2 crore, now you have to do the bifurcation. If whatever the capital gain income is, that capital gain or dividend income is, the maximum surcharge would be applicable. Maximum surcharge that would be applicable is 15%. Maximum surcharge that would be applicable is 15%. If other income is up to 2 crore rupees, then surcharge is 15%. But if it is more than 15%, if it is more than 2 crore up to 5 crore, then 25% surcharge would be applicable. So right answer is yes. Sir, we got this point. Oh my God, sir. Oh my God. Soumya also says 15 oblique 25%. Wow, Soumya. Finally, it's good to see you. Now, we have with us next question number 7, which says your total income is 7 crore, out of which capital gain income is 4 crore and other income is 3 crore rupees. How much surcharge would be applicable? How much surcharge would be applicable? Arey Baba, batao na. Do you want me to cry? Do you want me to cry for not responding? Sir, done. Don't do overacting. Everything is okay. Don't do overacting. Monica says that me never stop the beat says 15 oblique 25%. Monica says 15 oblique 25%. Soumya says 15 oblique 25%. Dia says 15 oblique 25%. What others are doing? Are you eating some food? Are you sleeping? Satish says 15 oblique 25%. I hope you all got the trick how to solve it. Find out the total income. If total income is more than 2 crore, you have to do this split. You have to do the segregation. Whatever cap gain income is, it would attract a surcharge of 15%. Whatever the other income is, it would attract surcharge based on size. If it is up to 2 crore, 15%, 2 crore to 5 crore, it would be 25%. If it is more than 5 crore, it could be 37%. So here 50 oblique 25 would make sense. Next part, G, next part. We have 10 crore of total income, out of which cap gain income is 4 crore, other income is 6 crore. What would be the surcharge applicable? What would be the surcharge applicable, Baba? What would be the surcharge applicable? Keep your keyboards ready. Keep your keyboards ready. Beautiful, beautiful, beautiful. Soumya says 15 oblique 37. Dia says 15 oblique 37. Monica says 15 oblique 37. Sir, if income is more than 2 crore rupees, then you have to do the bifurcation. Whatever the cap gain dividend income is, maximum surcharge applicable is 15%. Sir, whatever the other income is, maximum surcharge applicable is, sir, it depends upon income. It depends upon income. Satish, we are studying old regime for right now. We will study new regime later on. We will study new regime later on. Don't worry. Huh? What this point says, sir, if total income is up to 2 crore, other income is up to 2 crore, then 15%. Other income is more than 2 crore, up to 5 crore, then 25%. And last thing, if income is more than 5 crore, then it would attract 37%. So 15 oblique 37 would be answer. Sir, I had issue with my laptop, so could not reply this log. Okay, okay, no issue. Last thing, last thing. 10 crore we have, sorry, last thing we have for 20 crore income and 10 crore cap gain income, 10 crore other income. 10 crore cap gain income, 10 crore other income. How much surcharge would be applicable? No extra points for guessing. If income is more than 2 crore rupees, you have to do the split. On this 10 crore, maximum surcharge applicable is 15%. On the other income, since it is more than 5 crore, it would attract 37% surcharge. That is what Monica said, that is what Soumya said, and that is what others would agree as well. Are we comfortable enough with the surcharges? Are we comfortable with the surcharges? Are we comfortable enough with the surcharges? Are we comfortable? Yes, yes, yes. Whenever you calculate taxes, whenever you calculate the surcharge, whatever the tax plus surcharge you arrive at, you have to add education cess. You have to add education cess at the rate of 4%. Health and education cess at the rate of 4%. Let's do one question as to how do we actually solve this. Right now, will there be class on Sunday also? Right now, not on this Sunday, but in further Sundays we might plan out. Okay, right now, not on this Sunday, but on further Sundays we might plan. I want you all to solve a question. I want you all to solve a question with me. Okay? Participate. This is the finest question that you have ever seen. You will enjoy this question. Okay? For example, we have with us Mr. Satish. We have with us Mr. Satish. Now, Satish has business income, not business income. He has LTCG 112 of 1 crore. Oh wow. Oh wow. He has STCG 11111A of 50 lakh. Wow, sir. Wow. He has LTCG 112A of 40 lakh. Oh, great, sir. He has other STCG, not other STCG. He has winnings from lottery, 1 crore. Wow, sir. He has other STCG from sale of gold, 20 lakh. He has dividend, 20 lakh. He has business income, 2.8 crore. Overall, his total income turns out to be 1 plus zero point 0.5 plus zero point 0.4 plus 1 plus zero point 0.2 plus zero point 0.2 plus 2.8. All in all, his income turns out to be 6.1 crore rupees. Correct me if I have done some mistake. Correct me. 1 crore, 50 lakh, 1.9, 2.9, 3.1, 3.3, and 5.3, 6.1. Yes, it is correct. This is the total income. I want you all to have two paragraphs. Okay? Calculate the taxes and calculate the surcharge as well. I want you all to participate in this point carefully. Okay? I'm not letting you solve. If you want, you can solve it faster. You can write down the answer. You can give me the tax liability. If not, I'm letting you. I'm solving it with you. How do we calculate taxes and surcharge? Sir, if we have any income of 112, now it is being taxed at the rate of 12.5%. We will study this in cap gain. This is being taxed at 12.5%. So overall 12,50,000 is the tax liability. Done, sir. Whatever the STCG we have, it is being taxed at 20%. As of now, we have tax rate of 20%. So flat 20% would apply. That means 10 lakh would be the tax liability. Yes. 112A is taxed at the rate of 12. It is taxed at 12.5%, but we get a deduction of 1.25 lakh minus 1.25 lakh and multiply it with 12.5. This is how we will get tax rate. 484,375. This is how we would get the tax on this. Winning income is being taxed at the rate of 30%. Yes. 30 lakh. Yes. Yes, yes, yes. No issues. No strings attached. All these three incomes would be taxed at slab. That means this entire, I am doing this calculation here. I am doing this calculation here. 3.2 crore income. And this would be taxed at that of slab. That means can I reduce 10 lakh, multiply 30%, plus add 1 lakh 12,500. Can I do that? Can I do this? You are aware of this thing. Can ICI do ICI does that? Can ICI does that? Yes, ICI also follows the same thing. 3 crore 20 lakh minus 10 lakh into 30% plus 1 lakh 12,500. That means entire whatever the income remains is being taxed at 94,12500. How much surcharge would apply? How much surcharge would apply? Sir, if total income is more than 2 crore now, we are very much familiar that surcharge is income is to be split. Whatever the dividend income is, whatever the dividend income is, whatever the 112A, 112 and 111A, these three incomes are, on this maximum surcharge would be 15%. And on other income, how much turns out to be? Other income we have to see. How much is the cap gain income? 1 crore, 50 lakh, 40 lakh, and dividend 20 lakh. That means 1 plus 0.5 plus 0.4 plus 0.2. That means on 2.1 crore income, surcharge would be 15%. And on other 4 crore income, surcharge would be 25%. Yes. We have done this. This exercise, we have done this. Last 10 questions that we asked, this was this only. We split the income. Based on the split income, we decide the surcharge percentage. We have done this. How do we actually apply the surcharge? This is what I am trying to tell you. Sir, very carefully listen to this point very carefully. Sir, LTCG income, we have taxes. On this taxes, 15% surcharge would apply. 12,50,000 into 15%, 18,000, 1,87,500. Very simple point. Short-term capital gain, again 15% surcharge would apply. That means 1,50,000. Very simple point. Long-term capital gain, 15% would apply. Very simple point. 484,375 into 15%. Very simple point, sir. Very, very, very simple point. 72656. This is very easy point. Sir, on winnings, how much surcharge would be applicable? On winnings, how much surcharge would be applicable? We are very much clear. Whatever the other income is, sir, surcharge applicable is 25%. Whatever the other income is, we have a surcharge of 25%. So 25% surcharge would apply here. Yes. Yes, 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 yes. Agreed. Everybody agreed. That means 7,50,000 would be surcharge here. 750 would be surcharge here. Now my question to all of you is, on these three incomes, our entire total taxes 94,12,500. But whatever the taxes are on other STCG, surcharge would be 25%. Whatever the dividend taxes are, surcharge would be 15%. And whatever the business income is, taxes on business income, on that surcharge would be 25%. Now, how do we divide these taxes? How these taxes are divided in other income, in other STCG, in dividend and business income? How do we divide it? How do we ascertain that what are the taxes on dividend income? How do we ascertain what are the taxes on dividend income? How much? How do we ascertain? Provision says, do nothing. Eat 5-star, do nothing. Eat 5-star and do nothing. Na. Monica, dividend will never be taxed at 15%. Whatever the taxes on dividend are, surcharge would be 15%. There is a difference. Huh? What do I mean? See, this tax is on total income of 3.2 crore. This tax is on total income of 3.2 crore. 94.125 lakh is on the total income of 3.2 crore. Out of this 3.2 crore, now 0.2 crore is dividend income. That means, can I say 94.125 divided by 3.2 into 0.2? That means, can I say 5,88,281 is the taxes on dividend? Can I say that 5,88,281 is the dividend tax on dividend? Yes, yes, yes. Whatever the taxes on dividend have been arrived at, on this taxes now 15% surcharge would be applicable. And whatever the taxes others are, 94,125,000, whatever the taxes remain, that is 94,12,500 minus 588,281. Remaining taxes turn out to be 288,24,219. On this, 25% surcharge would be applicable. Now tell me, did you get what point I was trying to tell? Did you understand what point I was trying to tell? My point is, see, we are very much aware that whenever we have capital gain income, dividend income, surcharge would be applicable 15% only. Maximum surcharge would be applicable 15% only. Yes, sir. We are very much aware. Whatever the income we arrive at, the surcharge is 15% only. But the issue is, we are not aware. We are literally not aware. How do we arrive at the taxes on dividend? Because taxes on dividend is based on slab rate. So we have to segregate the taxes on dividend, and based on that taxes on dividend, we add 15% surcharge. Got this point carefully or not? Got this point carefully or not? One question I am giving you as homework, you have to solve it. As a small homework, you have to solve it. Okay? A small homework you have to solve. I hope you got the point. Whatever surcharge you arrive at, just multiply the percentage, you would arrive the surcharge. Okay? You will arrive at surcharge. One question I am asking you to solve. We have with us Monica. Yes, sir. Yes, sir. Anybody who has any doubt in the point that we discussed? See, intention behind taking this question was to make you understand how do we segregate the income. While segregating, remember, other type of short-term capital gain is taxed at 25% surcharge only. Other short-term capital gain surcharge applicable is 25%. First thing. Second thing, how do we get taxes on dividend? Taxes on dividend has to be segregated. There has to be proportionate taxation done. You have to segregate the tax on dividend, and whatever the taxes on dividend are, 15% surcharge would apply. And whatever the other incomes are on that, 25%, 37%, whatever the applicable surcharge rates are applicable would apply. Got it, sir? We have with us Monica. Now, Monica has business income of 2.5 crore. She has dividend income of 60 lakh. She has cap gain of 112, okay, 112 under section 112, 1 crore. Cap gain under section 112A, 50 lakh. Cap gain under section 111A, 60 lakh. Online gaming, she won at Dream 11, 20 lakh rupees. I'm changing a figure सा बेटा, थोड़ा सा figures I am changing. Business income is 1.9 crore and dividend income is 0.11 crore. Minus, don't solve it right now. Solve it today at home. And after tomorrow we will discuss this answer. Okay, tomorrow we will discuss this answer. Very finest question you will see. Okay. Right now you don't have to do this. We will do it tomorrow. Okay. Huh. This is the homework that you have to solve. This does not only include the tax rate, it also includes the concept that we'll study later on. I'm sure that you must have never practiced this type of questions. Sir, are we clear with the general tax rates, general old tax rates of individual HF, AOP, BOI, artificial juridical person? Are we familiar with the general old tax rates? Okay, these are general tax rates that mean applicable other than special income. Dividend income is 11 lakh rupees. Okay, dividend income is 11 lakh rupees. Dividend income is 11 lakh rupees. Okay. What we are discussing here precisely? What we are discussing here, we discussed general tax rates of individual HF, AOP, BOI, artificial juridical person. Perfect, sir. Perfect, sir. Perfect. Come on to the tax rate of other person. If you have any type of partnership firm, if you have any local authority, or if you have any LLP, if you have any firm, local authority or LLP, I am requesting all of you to highlight this local authority. Highlight this local authority, because when I will teach you taxation of local authority, there are 100% chances that you will forget the tax rate. There are 100% chances, 100% students forget the tax rates. If you are a firm, local authority, LLP, they are taxed at 30% flat. Every rupee of what they earn are being taxed at 30% flat. Flat 30% is being taxed. Whatever income AOP earns now, if income is more than 1 crore rupees, then 12% surcharge on the taxes is applicable. If income is up to 1 crore, no surcharge. Wow, sir. Not, sir, not very clear whether it is in lakh or crore. See, business income is 1.9 crore, dividend income is 11 lakh rupees. Soumya, business income is 11 lakh rupees. Sorry, dividend income is 11 lakh rupees. What special point is, let me brief that as well to you. Your total income, your general income would be 2.01 crore rupees. Other income, whatever it turns out to be, you might also have to check for marginal relief as well. You might also have to check for marginal relief as well. That is one of the case. Try solving it of your own. Otherwise, tomorrow we will discuss this. Sir, if you are a firm, local authority, LLP, firm, local authority, LLP, in that case, flat 30% surcharge would be applicable. Flat 30% surcharge would be applicable. So flat 30% tax would be applicable. If your income is up to 1 crore rupees, no surcharge. If your income is more than 1 crore rupees, then flat 12% surcharge would be applicable. In either cases, 12% education cess, 4% education cess is to be mandatorily added. Correct, 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 Monica. Now we have tax rate of a company. If you are a foreign company, if you are a foreign company now, flat 35% tax rate is applicable irrespective of your income size. Flat 35% tax rate is applicable. But if you are a domestic company, now in domestic company, you have to check if you are a company whose turnover in previous year 23-24 is up to 400 crore rupees, then in that case, tax rate is 25%. If it is otherwise, if it is other company, in that case, tax rate would be 30%. So you have to check the turnover of previous year 23-24, previous year 23-24. In that case, you would be taxed at 25%. Otherwise, you would be taxed at 30%. Now, what if our company was not even existing back then? For example, our company is incorporated on 1st April 2025. How do we ascertain the turnover? Assume it is zero. Assume it to be zero. If your company is not incorporated as on 1st April 2020, as on previous year 2024, then assume turnover of that year zero. Sir, why do we take previous year 23-24? That is a bit logical. That is a bit logical. Sir, tax rate is to be defined for previous year 25-26 now. Budget for this year came on 1st Feb 2025. This on this date, previous year 24-25 was already in force. So government cannot use previous year 24-25 as base because people would still have 2 months to manipulate their turnover now. So government always keeps a fixed year. A fixed year that has already been completed as on the budget announcement date. Therefore, people would not manipulate their turnover. Therefore, only 2 years back 2 years back turnover is always given. Whenever you see the turnover limit, now this tax limit, it always puts 2 years back turnover as the threshold. Got it, sir. Got it. Logic is not relevant. Point is relevant. Point is more relevant. If you are a foreign company, then 35% tax rate. If you are a domestic company, in that case, if your turnover in previous year 2024 is up to 400 crore, then 25%. Else, it would be 30%. Done, 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 sir. Done, 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 done. How much surcharge is applicable to the company? See, if you are a domestic company and your total income is up to 1 crore, now no surcharge. But if your total income is more than 1 crore up to 10 crore, then 7% surcharge is applicable. If your total income is more than 10 crore now, then surcharge at the rate of 12% would be applicable. Similarly, for foreign company as well, if your total income is up to 1 crore, no surcharge. 1 crore to 10 crore, 2%, and more than 10 crore, it is 5%. Done, sir. We have, of course, 4% education cess is to be mandatorily added. 4% education cess is to be mandatorily added. We have a cooperative society. Sir, cooperative society is very dangerous. Very dangerous. If you can draw this skull, of course, you would be able to draw better than mine. But if you can draw skull here, it doesn't look scary, sir. If you are a cooperative society, then up to 10,000, 10% tax rate would be applicable. Income more than 10,000 up to 20,000, 20% tax applicable. If income is more than 20,000, then 30% tax is applicable. Sir, this is important because people forget the tax rate of a cooperative society. Most oftenly, they forget. In addition to that, sir, they would be charged to surcharge like a domestic company. Up to 1 crore income, no surcharge. 1 crore to 10 crore, then 7%. More than 10 crore, 12% surcharge would be applicable. At last, 4% education cess, always mandatorily added. Always mandatorily to be added. Got it, sir? Got it, got it, got it. Sir, we are done with basic tax rates, but I will not let you go this easily. I will not let you go this easily. If you have a notebook with you, write down all the tax rates with me. Write down all the tax rates with me because I know you are aware of these things, but some things you might not forget. Some things you might forget. Leslie, write it with me. Sir, I am writing. Focus on what I am saying, not on what I am writing. Okay? If you are any individual HUF, AOP, BOI, artificial juridical person, Then general tax rate as per old regime would be up to 2.5 lakh, no tax. 2.5 lakh to 5 lakh, it would be 5%. 5 lakh to 10 lakh, it would be 20%, and greater than 10 lakh, it would be 30%. Similarly, if you are senior citizen plus resident plus that is greater than or equal to 60, in that case, up to 3 lakh, no tax. 3 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, it is 20%. Greater than 10 lakh, it is 30%. If you are super senior citizen, that means greater than 80 years of age, plus you are resident as well. In that case, up to 5 lakh, no tax. 5 lakh to 10 lakh, we have 20%, and greater than 10 lakh, we have 30%. Once you determine the tax, then you have to add the surcharge on that. How much surcharge is applicable? If total income is up to 10 lakh, up to 50 lakh, no surcharge. 50 lakh to 1 crore, in that case, surcharge would be 10%. 1 crore to 2 crore, surcharge would be 15%. Greater than 2 crore, you have to do the split. 111A, 112A, dividend. Maximum surcharge is 15%. Other income, if it is up to 2 crore, then 15%. 2 to 5 crore, 25%. Greater than 5 crore, 37%. After adding this, 4% education cess is always added. Firm, 30%. Total income, up to 1 crore, no surcharge. Greater than 1 crore, 12% surcharge. Company, if you are a foreign company, 35%. Domestic company, you have to check the turnover of previous year 23-24 up to 400M. So 25, else 30. How much surcharge is applicable? For foreign company, total income, if it is up to 1 crore, no surcharge, no surcharge. 1 to 10, 7% oblique 2%. Greater than 10, 12% oblique 5%. In whatever the case, 4% education cess is added. For a society, 10K, 10%. 10 to 20, 20%. Greater than 20, 30%. And surcharge, up to 1 crore, no surcharge. 1 to 10, 7%. Greater than 10, 12%. After adding everything, 4% education cess is always added. Are you able to recall all the tax rates? Are you able to recall all the tax rates? Are you able to recall all the tax rates? If not able to write, but were you able to recall whatever tax rates I have told you? Were you able to recall all the tax rates that I have told you? Arey Baba, say na yes. Yes, 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 sir. Don't do overacting. We understood. We understood. Okay. As sir, as sir, as sir. Okay. Coming on to a very peculiar topic, peculiar yet important. For example, we have with us Soumya. Okay. We have with us Soumya. Soumya, in 1 year, was earning 4 crore 99 lakh 99,999. She was earning. Case 1. Case 2. She is earning 5 crore 10,000. Age 22. Regime old. Wow, sir. Can you all calculate the taxes, surcharge, health and education cess? Can you all calculate separately for both the cases? Can you calculate? Can you calculate it for me, sir? Let's do it together. Let's do it together. Let's do it together. Okay. Whenever income is 499, 4 crore 99 lakh, 9,999. How do we arrive at taxes? Of course, always reduce 10 lakh, multiply it by 30%. At 1,12,500, you will arrive at taxes. 499999999 minus 10 lakh into 30% plus 1,12,500. All in all, it turns out to be 1 crore 48 lakh 12,500. Very simple it is. Similarly, on taxes on this 500, acha, taxes on this would be minus 10 lakh into 30%. Sir, can we do this in exam? Of course, ICA does the same thing. You are allowed to do so. You have freedom to solve this, use the shortcut. 14815. Yes. If you would see difference between the two, if you see the difference between the two is just of 3,000 rupees. If you see the difference between the two, it's just 3,000 rupees. How, sir? How 3,000? Just think of it now. Your income is 5 lakh rupees and 5 lakh 10,000 rupees. Here also you are taxed at 30% almost. Here also you are taxed at 30% also. So whatever the increment income is 10,000 rupees, on this 30% taxes 3,000, difference is 3,000. Very logical. Very logical. You know what? When it comes to surcharge, on this income, surcharge is applicable of surcharge applicable is 25%. On here, surcharge is applicable 37%. On this tax, 148,12500, 25% is applicable, and 148,15500, surcharge applicable is 37%. 54,81,735. If we do the total, 202,97235. 148,12500 into 25%, that is 37,03,125. One 185,15625. Just wait for 2 minutes now. Just wait for 2 minutes. Look at this, what actually happened with Soumya. If I'm pronouncing your name correctly, if I'm doing any pronunciation wrong, now just correct me. I am very bad at pronouncing the names in South Indian people. See, my sister's name is also Soumya, but she writes the spelling differently. So I might pronounce your name wrongly. Just correct me if I do wrong. Now, can you see a difference? Can you see a small, meager difference? Soumya earlier was earning 4 crore 99 lakh 99,999. She was earning that much. And in that case, she was assessed due to tax of 1.85 crore rupees. Correct. Income of 5 crore, taxes of 1.85 crore. Income of 5 crore, taxes of 1.85 crore. Correct? Yes, sir, correct. Just because she earned 10,000 rupees more, now she is required to pay 17 lakh rupees extra taxes. 17 lakh rupees of extra taxes. Are you getting this point? Are you getting this point? How much disastrous it is for Soumya? Just because she's earning 10,000 more, taxes have shot up increasingly because there is change in surcharge bracket. Earlier she was surcharged she was surcharged at 25%. Now she is being surcharged at 37%, because of which her income is just increasing by 10,000 rupees, but her tax liability has shot up by 17 lakh rupees. Are you able to feel the issue? If you're able to feel the issue, then only you'll be able to connect with it. Are you able to feel the issue? If you're able to feel the issue, then only you will be able to solve it. Soumya is crying. Wah, wah. Overacting nahi kar. Don't overacting. Soumya is crying. ऐसे wah, wah करके she's crying. She's crying. What she's saying, listen what she's saying. अरे यार, 5 crore I'm earning. If I'm earning 5 crore rupees, I am being charged to tax of 1.85 crore. If I'm earning 5.15 crore 10,000 rupees, my tax liability is short by 17 lakh rupees. Income is increasing by 10,000 rupees, tax is increasing by 17 lakh rupees. What do I do? What do I do? Instead of charging this 17 lakh of tax, just take away the 10,000 rupees now. Whatever extra I'm earning, just take away the 10,000 now. What, take away the 10,000? Whatever extra I'm earning, just take away. Whatever extra I'm earning over 5 lakh rupees, just take away. On 5 lakh, up to 5 crore of income, 25% surcharge is applicable. Just take away the over and above income and tax me at 25%. Surcharge me at 25%. Getting this point, what Soumya is trying to say, whatever the taxes are applicable on 5 crore income, just charge me that taxes, and whatever extra I am earning, just take away now. Just extra, whatever I'm earning, just take away. This is what the point is. She has to surrender this 10,000 rupees to her 1,86,000. 1,85,000, what it is? 10,000. 1,85,000, 1 crore 85 lakh 25,625 is the extra money that she has to forgo. And she just has to pay this. She will be relieved from paying this. She will be relieved from paying this. Relieved from paying this. How much relief she has got? Now she is only required to pay 1 crore 85 lakh 25,625. Earlier she was required 2 crore 2,97,235. That means she has got a benefit of 17 lakh 71,610 rupees. This is nothing but a marginal relief. This is a marginal relief that she is getting, and this is what matters the most in exam as well. This is how do we calculate marginal relief. Did you get the flavor of as to how you have to think? How you have to think? Did you get the flavor how you have to think? First thing you have to do is follow first thing you have to do is calculate taxes on both the incomes. Calculate taxes on both the incomes and surrender whatever extra you have. Surrender extra whatever you have. Sir, if I put these things into steps, there are 5 steps as to how to do things. There are 5 steps. Huh? In exam, you have to solve, you have to write these 5 steps, then only you will get marks. Okay? First step is calculate taxes. For example, income of Soumya is 5 crore 10 lakh. Okay? 5 crore 1 lakh. Not 1 lakh, 5 crore 10,000. Huh? Calculate taxes plus surcharge on income given in question. Always follow these 5 steps. Your answer would always match. Always match. Calculate taxes plus surcharge on income given in question. Whatever the income that has been given to in question, always calculate taxes and surcharge. On this 5 crore 10 lakh, now how much taxes plus surcharge would be arrived at? 20297. 20297,235. 20297,235. This is the amount of taxes plus surcharge. Step number 2, calculate taxes plus surcharge on nearest surcharge bracket. Nearest surcharge bracket. What is nearest surcharge bracket? The point at which surcharge changes. For example, individual surcharge changes at 50 lakh rupees, 1 crore rupees, 2 crore rupees, 5 crore rupees. For a company, it changes at 1 crore, 10 crore. For a cooperative also changes at 1 crore, 10 crore. And for firm also changes at 1 crore. So you have to calculate taxes on the nearest surcharge bracket. In this case, nearest surcharge bracket is 5 crore rupees. How much taxes are arrived at 5 crore rupees? Sir, 1 crore 85 lakh 15,625. 1 crore 85 lakh 15,625. These 2 steps have to be mandatorily done. Step number 3 says, whatever the taxes are calculated in step 2, taxes in step 2, that is 1.8515,625 plus extra income, whatever you have, whatever extra income, sir, 5.001 minus 5 crore, 10,000 extra, whatever you have, just surrender that. This will give you the tax liability. What is the amount of marginal relief? Sir, whatever the tax we arrived at, 185, 25, 625, 185, 25, 625, minus what you were required to pay step 1, 202. This will give you surcharge marginal relief of 70 lakh something, and whatever the tax liability you are arrived at, just add 4% education cess on this. This will give you final tax liability. Step number 5, you have to mention the final tax liability. You have to follow these 5 steps, then only examiner is going to give you marks. Okay, steps are not relevant. As such, marginal relief is not that frequently tested question, but the fact is you must be aware of as to how to solve this question. Very simple, sir, very simple. Now I have 3 questions for you all. Question number 1. You are a company, turnover 0 in previous year 23-24, income of 10 crore 2 lakh. Calculate final tax and marginal relief. You are a firm, total income of 1 crore 50,000. Calculate final tax and marginal relief. You are a cooperative society, total income 1 crore 2 lakh. Calculate tax and marginal relief. 3 things you have to solve. 3 questions, 3 parts you have to solve. Okay? Very difficult point. Very, very, very difficult. Very difficult. Such difficult that you will never be able to solve. Is it? Is it? No, sir. It's easy. It's easy, sir. It's easy. I will solve 1 for you. Rest 2 you can solve. I'm solving for company. Rest you can solve. Sir, step 1. Calculate the taxes plus surcharge on 10.02 crore. How much it turns out to be? Sir, 25% tax plus 12% surcharge. This would give us the step number 1, 10 crore 2 lakh into 25% tax into 1.12. That means step number 1 is 2 crore 80 lakh rupees 56,000. This is the step number 1. Step number 2 says tax plus surcharge on nearest surcharge bracket. Sir, where is nearest surcharge bracket for this company? It is 10 lakh rupees. 10 crore rupees. On this, it would be 25% tax plus 7% surcharge. So on 10 crore into 25% into 1.07, it would be 26,267,500, 4 zeros. Again, think of Soumya's point of view. If she would have had the income of 10 crore, only 2 crore 67 lakh for the taxes. But income short by 2 lakh rupees, so her taxes short by 13 lakh rupees. Wow, what an injustice. Income short by just 2 lakh rupees, her top taxes short by 12 lakh rupees. So it is advisable for her to surrender this extra 2 lakh rupees. It is always advisable for her to surrender this extra 2 lakh rupees. So step number 3 says whatever the taxes are arrived at 267 50,000 rupees plus whatever extra you have surrendered, that you will arrive at the final tax 2695 400. If you add 4% education cess on this, now you will arrive at final tax liability. You will arrive at final tax liability. That is 280,28123. And if you want to calculate the marginal relief, step number 1 minus step number 3. Always calculate marginal relief before education cess. Never ever add education cess for calculating marginal relief. So 2.8056123 minus 26951,234. Oh dear God. 28056 minus 269,500. 11 lakh is the marginal relief amount. 11 lakh 06,123 is the marginal relief amount. Is it that undoable question that you can ever think of, that you cannot ever think of? Is it that undoable? Is it that undoable, not doable question? You cannot even think of doing this. Is it that difficult question? Arey Baba, tell me na, is it that undoable thing? It is that undoable thing that you cannot even think of. Sir, it is doable. It is not that difficult. We personally didn't think of it. Very difficult point. I personally never thought it difficult. No, sir. Just for your reference, just for a reference, should I solve this cooperative society as well? Should I tell this cooperative society as well? How do we solve cooperative society as well? Let's do it. Let's do it. Let's do it. Cooperative society, 1 crore, 2 lakh. Tax on this would be step number one is tax plus surcharge on the income given in question. Whenever we have a cooperative society, tax rate for cooperative society is up to 10,000, 10%, 10,000 to 20,000, 20%, more than 20,000 is 30%. So can I say 1 crore, 2 lakh minus 20,000 into 30% plus 3,000, this would give us taxes. 30 lakh 57,000 would be taxes. Of course, cooperative society is there, so we would add surcharge also into 1.07. So tax plus surcharge on the income given in question would be 32 lakh 70,990. This is the tax plus surcharge. Step number 2 says tax plus surcharge on income or on nearest surcharge bracket, that is 1 crore. How much it would be? 1 crore minus 10,000 into 30% plus 3,000. This would give us the second. This would give us the tax plus surcharge. It is 20,000, huh? Minus 20,000. 29 lakh 97,000. This is the tax plus surcharge. Again, think of so from Soumya's point of view. If she would have had income of 1 crore rupees, taxes were 29.97. But if her income rose by 2 lakh rupees, her taxes shot up by also 2 lakh rupee, 2 lakh 70,000. Income rose by 2 lakh rupees, taxes shot by more than 2 lakh, more than 2 lakh. So it is advisable whatever the taxes are there, she pay taxes on this plus surrender extra income. On this taxes only, she can surrender this 2 lakh rupees of income. 31 lakh 97,000. Earlier, she was required to pay 32 lakh 70,000 rupees. Now she has to pay 31 lakh 97,000 rupees. So difference between the two, 32 79,0990. 32 70990. That means she got a marginal relief of 73,990 rupees, and she final tax liability would be 31 lakh into 4,000, 31 lakh 97,000 into 1.04, 33 lakh 24,880 is the final tax liability. This is the final tax liability that Soumya cooperative society has to incur. Are we clear with this concept of marginal relief? Are we clear with the concept of marginal relief? Will you be able to solve the question of marginal relief? Must do question. Do it today and share it with me on Telegram number. I will share towards the end of the session. ठीक है? Okay, sir. Okay. Done, sir. Done. Moving forward towards a very important thing, that is very important thing. Without this, we might never be able to proceed. Very important thing. Sir, it is 9:35. Okay. I always give 1 to 2 minutes extra. You can take your time. You can take your time. No hurry whatsoever. We will go slow. Don't worry. First session it is, so we'll go slow. Take a break. Have a breakfast. Do not use mobile phone. I humbly, with both hands joined together, request you, do not use mobile phones because it is not going to rejuvenate you at all. Okay, see you guys after the break. Welcome back from break. We are with us Febak. Will this batch be on YouTube fully? Right answer is no. There are 5 classes. First 5 lectures would be on YouTube and remaining would be on Fast app. Are you all back from break? Yes, sir. Yes, sir. We didn't go anywhere. We are absolutely back from break. Okay, okay, okay. Yes, sir. So, what did we study before going to break? We understood the basic concepts. We understood the process of the batch. We understood how we are going to proceed forward. We understood tax rates. We understood the marginal relief concept as well. Tax rates, surcharge, education cess, and at last marginal relief. Done, 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 sir. So there is a small concept I want you all to be aware of is rebate under section 87A. Right now, I am just discussing rebate under 87A under old regime only. Since I have not taught you 115 BAC, I am not going to discuss about it at all. Right now, I am just talking about old regime. Once we will study 115 BAC, we will understand the rebate in that. Okay? What this rebate under old regime is about, provision says if you are any individual, plus you are a resident. Is it for resident only? Yes, only resident. If you are an individual plus resident, plus total income is up to 5 lakh rupees. Total income is up to 5 lakh rupees. Provision says you get a rebate. And how much rebate? Sir, rebate you get is 12,500 rupees or tax payable, whichever is lower. What does this imply? Sir, whatever the tax liability you arrive at, or 12,500, whichever is lower, will be given to you as rebate. Remember, whenever you consider tax payable, it is always before education cess, and no rebate is allowed against 112A income. If you have any income now which is taxed under section 112A, that means listed equity shares, listed equity oriented mutual funds, listed units of business trust. If you have any such securities now on which you have long-term capital gain, against it, na rebate will not be allowed to you. I hope you got the point. These are the things on which rebate you will not be allowed to you. Otherwise, every other income now you would get rebate. So do we get rebate on online gaming? Yes, you get it. Do we get rebate on lottery? Yes, 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 yes. Do we get rebate on short-term capital gain? Yes. Long-term capital gain? Yes. Do we get rebate on horse racing? Yes. Under old regime, we don't have any restriction for this rebate. No restriction attached under old regime. But under new tax regime, whatever restrictions are there, we will study that when we'll study that. Done, sir? Done, ji? Sir, there is a small provision. There is a small provision. If your income is 4,99,999, you get a rebate of taxable or 12,500, whichever is lower. But if your income exceeds 5 lakh rupees, even by a rupee, for example, your income is 5 lakh 1 rupee, provision says no rebate is allowed. No rebate at all is allowed. At all. No rebate at all is allowed to you. Sir, this is all about your basic tax rates, general tax rates, marginal relief, surcharge, and rebate 87A. This is what we need to understand before starting of the first chapter. Two more pointers I would like you to focus before understanding. See, if there is an individual, HUF, AOP, BOI, artificial juridical person, who pays tax under 115 BAC. Now, what would be his tax rate? See, tax rate I'm telling you, but conditions attached I'm not telling you right now because conditions are a bit technical. We need to complete the remaining topics of PGBP, cap gain. Then only we'll be able to understand the conditions. Right now, I'm just telling you the tax rates. Up to 4 lakh, no tax. 4 lakh to 12 lakh, we have tax rate. So 8 lakh, we have tax rate of 5%. 8 lakh to 12 lakh, we have 10%. 12 lakh to 16 lakh, we have 15%. 16 lakh to 20 lakh, we have 20%. 20 lakh to 24 lakh, we have 25%. More than 24 lakh, you have 30%. This is the tax rate as per 115 BAC. Okay. Surcharge remains same. Up to 50 lakh, no surcharge. 50 lakh to 1 crore, 10%. 1 crore to 2 crore, we have 15%. Greater than 2 crore, we have to do the split. Cap gain and dividend would be maximum surcharge is 15%. Other income, if it is up to 2 crore, then 15%, else 25%. There is no surcharge of 37% under 115 BSE. Of course, I'm just briefing you out this so that if there is a question that is coming our way, we will be able to answer that. Otherwise, there is no other reason why I'm telling you this. I will have to again tell this. I will have to again explain this, again explain the conditions attached to it when we are done with PGBP. Done, sir. Perfect, sir. Perfect, sir. Perfect. Starting on with our first chapter, that is income from capital gain. Already, all of you mentally, physically ready for this chapter? All of you mentally, physically ready for this chapter? Ready, sir. Ready, 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 ready. See, my concept, my funda is very simple. You should be always aware of what you are studying. For that matter, now I have classified this chapter into multiple different hierarchies. I want you all to draw this hierarchy. If not draw, then just take a screenshot of it when I am done drawing, so that you are aware of what you are studying. Capital gain is a very big topic, 35 to 40 pages we have in our book. And when you start with when you start with something now and you reach at a point, you tend to forget where you are standing. You tend to forget where you are studying. For that matter, now you should always refer back to this chart whenever you are studying. What this chart is about. Whenever you study capital gain, now first thing that you understand is basics. Basic definitions. For that we have charging section. We have definition of capital asset. We have definition of period of holding. We have definition of transfer. And at last we have rural agricultural land. These are the definitions we have to undergo. Then we have to go to computation portion. How do we arrive at computation? See, we know we need to do first of all basic computation. Important pointers. While considering the important pointers, we need to consider how do we calculate full value of consideration. For this, we have three sections, that is 50C, 50CA, and 50D. We need to understand cost of acquisition. How do we arrive cost of acquisition in case of intangible asset? How do we arrive cost of acquisition in case of, say, gift? How do we arrive cost of acquisition in case of bonus? How do we arrive cost of acquisition in case of right issue? ESOPs, demerger. And at last, in basics, we have provisos to section 48. Okay. Then we have special cases. We have special cases. What are the special cases in cap gain? First of all is ULIP taxation. Then we have slump sale. Then we have 45(4) oblique 9B. We have 50AA. We had liquidation. We have advance money forfeiture. We have demat securities. These are 10 special cases, 7 special cases. We have to understand. Very simple cases are there. After special cases, we are able to calculate the capital gain. Now we have to understand the exemptions. How do we save capital gain? For that, we have exemption series right away starting from 54 to 54 GA. In addition to that, we have 1037 and 1037A. These are the exemptions. How do we save the capital gain? After saving the capital gain, we need to understand the tax rates. Tax rates we have multiple 112A, 111A, 112. Once we are done with 112, now we need to study some old provisions, old and miscellaneous provisions. For that matter, we need to understand indexation concept, exception to 45(1), basic exemption limit set off, capital asset converted into stock in capital asset public stock in trade. And at last, when we are done with everything, now we'll come on to exempt transfer. This is the absolute pattern of the chapter. Whenever you are studying this chapter, now you must be very much aware of what you are studying. I'm saying this very politely. Why very politely? Why? Because you will get stuck. You will not realize where you are standing. And if you don't realize now where you are standing, you will never be able to complete that. You will never be able to brain map that chapter. Brain mapping is really important. So, okay. Right away starting from income from capital gain. Income from capital gain. Sir, what is charging section? Charging section, section 45(1) says any income arising from transfer of capital asset shall be taxable under that capital gain in the year in which transfer took place. Transfer of capital asset shall be taxable under that capital gain in the year in which transfer took place under that capital gain. So this definition has 4 or 5 components. First of all, there has to be gain and profit for tax purpose. There has to be gain and profit. There has to be a capital asset which is being transferred. It will be taxed under head capital gain in the year in which transfer took place. So first of all, there has to be a gain. In case of loss, no tax is going to be charged. There has to be a capital asset whose transfer undertook. It will be capital gain head. That means can be short-term capital gain, long-term capital gain, when it will be short-term, when it will be long-term. And at last, the year in which the transfer took place. There are 5 parts to this definition. 5 parts to this definition. Any gain profit arising from transfer of capital asset shall be taxable under that capital gain in the year in which transfer took place. Every definition has to be demystified properly. Just wait and watch. Hole hole se sirf wait and watch. What is meant by capital asset? Carefully listen, because this definition has undergone changes. So it might be tested in exam. Provision says now there are 3 things which are called as capital asset. 3 things are capital assets. 3 things are called capital asset. 3 things. First of all is any asset is a capital asset. Oh, dear Lord, any asset is a capital asset. I have calculator beside me. It is a capital asset. I have a handkerchief, it is also a capital asset. I have earphones, that is also capital asset. I have a comb, it is also a capital asset. So don't do overacting. My sister has a nail polish on my table. This is also a capital asset. How poorly drafted definition it is. How poorly drafted definition it is. Every asset is a capital asset. Provision says no, 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 not every asset is a capital asset. Not every asset is a capital asset. Exclude four. Exclude four things. First of all, if you have any stock in trade, if you have any stock in trade for business, exclude that. It is not a capital asset. That means anything that I deal in is not a capital asset. Second thing, any asset which is movable plus personal, it is not a capital asset. For example, this comb, can I move it? Yes, sir, I can move it. Is it personal to me? Yes, it is close to my heart. It is close to my heart. It is close to my head. It is movable and personal. Therefore, it is not a capital asset. Anything which is movable as well as personal, it will not be a capital asset. Done, sir. Third thing, we have rural agriculture land. Rural agriculture land. Rural agriculture land is not even considered as capital asset. And at last, we have gold deposit certificates and gold monetization bonds. Gold deposit certificate and gold monetization bonds, these are also not considered as capital assets. But here is a catch. For example, if I am wearing a ring right now, I am not wearing. If I would be wearing a chain right now, I'm not wearing. Any kind of jewelry I have, any kind of jewelry I have, will it be considered as capital asset? Sir, it is movable, it is personal, yet it would be capital asset. Provision says, but if any jewelry, any drawing, any painting, any sculpture, any archaeological collection, any other form of art, any bullion, these assets, even if being movable and personal, would become capital asset. Even if these assets are movable, you can move them. Even these assets would be personal. So these are capital assets. So what did I say? Can you all recall after me? Sir, any asset is a capital asset, but subject to four exceptions. Stock in trade is to be removed. Movable personal assets is to be removed. But sir, any drawing, painting, sculptures, archaeological collections, jewelry, bullions, these are not to be removed. These are always capital assets. Any rural agriculture land is to be removed, and any gold deposit bonds and gold monetization certificates are to be removed. These things are to be removed. Now a question arises. Can you all identify which all assets are capital assets? Which all assets are capital assets? Can you identify? Hmm? Just look at this. Huh? If I have a car that is used in business, if I have a car that is used in a business, is it a capital asset? Let me try answering this for you. Let me try answering this for you. Sir, whether car is any asset? Yes, car is any asset. Therefore, is it a capital asset? Yes. Does it fall under exclusion? Is it stock in trade? No, it is not stock in trade. Is it a movable personal asset? Sir, car is movable, car is personal. But sir, here it is mentioned that car is used in business now, so it is not excluded. Any rural agriculture land? It is not rural agriculture land. Is it any gold monetization bonds? No. Therefore, it is a capital asset. It is a capital asset. Yes, it is a capital asset as said by Monica, as said by Soumya. Perfect. Second case, a second case. Understand this. You know what? One day I was drawing. I was drawing, and on drawing now, I drew a donkey. And there was another donkey on over and above this. Above this donkey, I drew myself, and over me, it was complete India. Of course, we are chartered accountant now, so on us, there would be entire nation. I named this painting as Assassination. S Nation. Did you like it? S on S. Over that S, it is me, and over me it is nation because I am a chartered accountant. I named this painting Assassination. Is it a capital asset or not? Is it a capital asset or not? I have a painting. Is it a capital asset or not? Answer like 2 point something. Is it a capital asset or not? You know what? Soumya says no. No. Oh my God. Oh my God. If I have a painting, it is not a capital asset, Soumya says. What other people say? As it is painting, it is not a capital asset. Oh, okay. Sir, it is a capital asset. It is a capital asset. Acha, wait a second. Just you all answer all the questions. Then I will tell the answers. Okay. Soumya says no. Dia says no. Perfect. Noted. Question number 3. I have a Kohinoor diamond. I went to London, robbed the museum, and took away the Kohinoor diamond with me. Right now, I have the legendary Kohinoor diamond is with me. Whether this Kohinoor diamond is a capital asset or not, answer like this: 3 point something, 3 point yes or no. Is it a capital asset or no? Is it a capital asset or no? I went to London. I robbed the Kohinoor diamond, and right now I have this Kohinoor diamond. Now tell me whether it is a capital asset or not. Whether this Kohinoor diamond is a capital asset or not. Monica says. Monica says yes. Satish says yes. Perfect. Perfect. Now, Soumya says yes. Yes, it is a capital asset. Everybody agrees with them. If we have a business, for example, I have a business of shoes, I have a business of garments. Jayashri says yes. Jayashri says yes. Kohinoor diamond is a capital asset. Yes, Jayashri also agrees. Welcome, Jayashri. If I am doing a business, if I have a garment manufacturing unit, is that garment manufacturing unit a capital asset? Is that garment manufacturing unit a capital asset? Write like this, 4 point something, so that I am aware that you are answering fourth question. If I have a garment manufacturing unit, is it a capital asset? Is it a capital asset? Is it a capital asset? Let me see how much you already know and how much I can correct in your case. Sir, if I have a business, is it a capital asset? Sir, business is a capital asset? Strange. We are not aware. We don't. Soumya says yes. Soumya says yes. Monica says yes. Yes. Satish says yes. Oh my God. Oh my God. Wow. Answer now fifth one. Fifth one. If I have a debentures of any company, answer like this. If I have debentures of any company, is it a capital asset or not? If I have debentures of a company, is it a capital asset or not? If I have debentures of a company, can I call it as capital asset? Sir, debentures? Debentures? Arey Baba, you have to tell. You don't. I'll not tell unless you answer all. I will not tell. Those who are watching this recorded, try answering it. Okay. Fifth, Soumya Satish says Soumya. Satish. Monica, Dia are in the favor of yes. Nobody's saying no. One day I was sitting in my garden. I felt some very poor smell. I thought somebody must have done something wrong, therefore smell is coming. But later on, I realized that there is a big gas chamber below my house. So much methane gas available that can fuel the entire city. Fossil fuel has been discovered below my house. Is it a capital asset? If I find a fossil fuel below my house, is it a capital asset? If I sell that fossil fuel, if I sell that entire land, if I sell the entire fossil fuel, will it be considered as capital asset? If I have fossil fuel, is it a capital asset or not? Right, like this. Point number 6. Satish says yes. In the favor of yes, we have Satish. We have Soumya. We have Dia. Wow, gee, wow, wow, wow. 3 people have said yes. We have Jayashri also yes. Oh, ho, ho. Nobody's saying anything against. All of you say yes. If you have a beautiful, see, you must be having concept notes. You must be having concepts or notes right now of any faculty, neither mine or any faculty's concept notes you must be having. Whether that concept notes for you is a capital asset or not. Whether those concept notes for you as a user, is it a capital asset or not? Right, like this. Point number 7. As the user of the concept notes, are these capital assets for you? As the concept note reader, whatever the notes that you have, can you call it as capital assets? Monica says yes. In the favor of yes, we have Monica. In favor of no, we have Soumya. Satish also says no. Monica also turned her answer no. Jayashri also says no. Okay. Now answer accordingly. If concept notes you have, whether those concept notes are capital asset for me. As a faculty, whether those concept notes are capital asset for me. For me. Right answer like this. 8.8. Whatever the concept notes you have, whether they are capital assets for me. Just answer like that. In the favor of yes, let's see who answers. In the favor of no, let's see who answers. Whether those concept notes that you are having right now, the beautiful colored ones, the beautiful ones that you are going to sleep together with, those concept notes are capital assets or not. In the favor of yes, we have Monica. In the favor of Jayashri, Dia. Jayashri, Dia. Soumya. No, Soumya says no. Satish says no. Okay, okay. Now last. One day I was roaming in my garden. All of a sudden I felt like a nail. I all of a sudden sang Kata laga uima uima uima. All of a sudden I felt a nail. When I dug that nail, I found out that it is a nail of a dinosaur. I found a nail of a dinosaur. Now tell me whether this dinosaur nail is a capital asset or not. Whether this dinosaur nail is a capital asset or not. Right, like this 9 point something. Whether the dinosaur nail that has been found in my backyard, is it a capital asset or not? Satish says yes. Yes is said by Satish. Soumya says, Dia says yes. And I hope everybody has got the answer. Okay. Let me answer for you all. Whatever answers you have given, of course, a great shout out to your efforts. Let me answer. Let me take this privilege to answer. Now, first of all, if I use a car in a business, is it a kind of asset? Yes, it is an asset. So it is a capital asset? Yes. I have already answered whether it falls under any exception. Right answer is no. Car doesn't fall under any exception. It is not a personal asset. It is not a personal asset. It is a business asset. It is not a rural agricultural land. It is not stock in trade. It is not a gold monetization bond. Therefore, it is a capital asset. If I have a painting, sir, any asset is a capital asset. Therefore, is it a capital asset? Yes. Does it fall under exclusion? Sir, I have drew this painting, so it is movable, it is personal, so it is excluded from being capital asset. But if you remember, any drawing, painting, sculpture, archaeological collection, any other form of art is a capital asset. Therefore, it is considered as capital asset. Any drawing, painting, sculptures, archaeological collection, anything that you have, it is a capital asset. Therefore, any painting drawn by me is also a capital asset. If I went to London and robbed the Kohinoor diamond, can I say it is a kind of jewelry to me? Or can I say it is an precious stone to me? So if it is a precious stone, it is a capital asset. Right answer is yes. Irrespective whether it is movable, personal, it is a capital asset. If I have debentures, sir, first of all, any asset is a capital asset. This has to be borne in mind. Any asset is a capital asset. So whether debentures are capital asset, yes. Whether it falls under exclusion, it is not stock in trade, it is not movable personal, it is not rural agricultural land. Therefore, yes, debentures are capital asset. Yes, capital asset. Whether business is a capital asset, see how business is a capital asset. See, if you have a business, is it an asset? Yes, it is an asset. Whether business is stock in trade, sir, business is different from stock in trade. Okay? It is not excluded. Whether business is movable and personal, no, it is not personal. Whether business is a land, no, it is not a land. Therefore, business is a capital asset. That is why when you sell a business, now you arrive at capital gain. Then, do you have any debentures? The debentures we understood, it is a capital asset. If I have a fossil fuel is nothing but a kind of archaeological collection. It is a kind of archaeological collection. Therefore, it is a capital asset. Concept book. If you have a concept as a student, you have a concept book. Is it an asset? Yes, it is an asset. Is it movable and personal? Yes, it is movable and personal. Therefore, it is not a capital asset. Right answer is no, it is not a capital asset. A concept book for you is not a capital asset, but a concept book for me is a capital asset. Right answer is no. Because it is a stock in trade for me. Therefore, no capital asset for me as well. Not a capital asset. And at last, if I have a dinosaur nail, yes, it is a capital asset because it is a kind of archaeological collection. I hope with this you will be able to answer every point that whether an asset is a capital asset or not. Okay. Apart from this, what all things are called capital asset? Provision says if any securities are held by FIIs or AIFs, alternate investment funds, first and second. If you are any alternate investment fund 1 or 2, or if you are any FII, whatever securities you have now are always considered as capital asset. You need to understand why capital asset is being benefited, why capital asset definition is important. See, if any asset is considered as capital asset, now it will have a benefit of lower tax rate. Government wants to give FIIs the benefit of lower tax rate. Therefore, government has strictly said any securities held by FIIs or AIFs are capital assets. In addition to that, we have a concept called ULIPs, unit linked insurance policies. These are also considered as capital assets. This we will study later on. We have a detailed discussion of ULIP taxation. We will study this. So what did we understand? Any asset is a capital asset except stock in trade, except movable personal asset, except rural agricultural land. But any jewelry, drawing, painting, sculpture, archaeological collection, any other form of art, bullion is a capital asset. Okay. Apart from that, sir, any securities held by FIIs or any securities held by AIFs are also capital asset, and any ULIPs are also capital assets. Done, sir? Done, sir. See, sometimes you might have silver utensils. Provision says any silver utensils, if you have at home, it is not a capital asset, it is a personal asset. But if you have any gold utensils, who would be there in the world right now who has gold as utensils? Provision says if you have gold utensils, it is considered as capital assets only. Silver utensils are personal, but gold utensils are not personal. It is considered as capital assets. Okay? This is the definition. This is the definition of capital asset. Come on to rural agriculture land. Now, what is rural agriculture land? What is a rural agriculture land? Rural agriculture land. Government is very clear. Very clear. Government says any land which is not urban. Wow. Which is not a urban land, it is a rural land. Wow. If somebody asks me, where do you live? I said, beside river. If he asks me, where is the river? I said, beside my house. Where you both are there? Both beside. What type of point is this? Any rural agriculture land is a land which is not urban land. And what is urban land which is not rural land? Wow. No, this is not how provision is being made. See, I'm just making it light because it is the first session. You need to get comfortable with me. But once you are comfortable now, we will escalate with this speed. Okay? Right now we are going slow. I can expect that you must be thinking, sir, itna slow, this is slow. Thoda sa you can be fast. Let me take my time. Let me take my time. We are going well. We will go well. Don't worry. Sir, what is an urban land? Urban land has to be understood carefully. Very carefully understand. Very carefully. If there is any area where you have municipality or you have municipal corporation or if you have a cantonment board. What did I say? If you have any area which has municipality, municipal corporation or cantonment board, that area is always urban area. Always this area is urban area. Always, understand, always remember. If area has municipality, municipal corporation and cantonment board, this area is always urban area. Always urban area. Plus provision says if population of this area is up to 10,000 now, then this area is only urban area. What did I say? Area of municipality, cantonment board and municipal corporation is always urban area. But if population is up to 10,000, then this area is only urban area. But sir, what if population is more than 10,000? Up to 1 lakh? Provision says in that case, whatever the municipal limits are there, whatever the municipal limits we have now, beyond these municipal limits, 2 kilometer area in addition to that will also be urban area. So what did I say? Municipality area is always urban. But if population is 10,000, then that area is only urban. But if population is more than 10,000, then beyond that municipal limits, 2 kilometer area would also be urban area. Oh, wow. Sir, what if population increases? What if population is more than 1 lakh, 1 lakh people? If population is more than 1 lakh up to 10 lakh, then what happens? Beyond this municipality, 6 kilometer area is also considered as urban area. After that, everything rural. After that, everything rural. If population is more than 10 lakh, then what would happen? If population is more than 10 lakh, then what would happen? Provision says beyond municipal limits now. Beyond municipal limit, 8 kilometer area would be considered as urban. 8 kilometer area. Kilometer area would be considered as urban. Are you able to understand? See, if you have a municipality, municipal corporation, or cantonment board in your area, then that area will always be urban. Beyond that, everything rural. If population is up to 10,000, then that area is only urban. Beyond that, everything rural. If population more than 10,000 up to 1 lakh, then 2 kilometers beyond the municipal limit shall also be urban. If population is more than 1 lakh up to 10 lakh, then population beyond up to 6 kilometers shall be urban. If population of that area is more than 10 lakh, no more than 10 lakh, then 8 kilometers area shall be urban beyond the rural limits. Sir, what if somebody stays here? If somebody is staying here, and we are driving car, and by a zigzag method we arrive at 10 kilometers away. Can I call it urban? Right answer is yes, it will be urban only, because 10 kilometers is not considered in zigzag manner. It is always considered as bird eye view. You have to consider it bird eye views. Straight line from the municipal limits you have to check. It should not be checked in zigzag manner to increase the distance. Always it has to be checked from bird eye view. But are we able to understand that what is urban area? What is urban area, sir? Urban area. Urban area is nothing but where we have municipality, municipal corporation, and cantonment board. That is always urban area. But if population is clubbed with that, then that area is only urban area if it has population up to 10,000. If it has more than 10,000 up to 1 lakh, then 2 kilometers beyond area will be urban. If population is more than 1 lakh up to 10 lakh, then 6 kilometers area. If more than 10 lakh, then it is 8-kilometer area beyond municipal limits that shall be urban. Dun 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 sir. Dun 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 sir. Dun 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 dun. Now we have a definition of transfer. Oi, इधर इधर मेरी तरफ see carefully yeah, very carefully. We have definition of transfer. What does the definition of transfer says? Understand na? If you have any asset that is being sold off, any kind of sale of an asset is a transfer. Any sale of an asset is a transfer. I have a cow. If I sell that cow, it will be considered as transfer only. If I exchange an asset, for example, if I have a cow and I gave this cow to Monica, and Monica is giving me her iPhone in return. Such a great deal it is. I have given a cow to Monica, and Monica is giving her iPhone to me. Provision says I shall be bound to have considered doing a transfer. I shall be considered to be doing a transfer. Third thing, any relinquishment of an asset. Sir, what does that relinquishment of an asset means? Relinquishment means letting go the asset. For example, if I gift any asset. For example, if I have a phone and I gift it to Dia, provision says that shall also amount to transfer. Done, sir. If you have any extinguishment of any asset, if any extinguishment in any right, what does it mean? For example, if I have shares of a company, and the company went into liquidation, in this case it is considered as transfer, because ultimately I had right in the share as assets of the company, and that right is faded away. That right is taken off because of liquidation. So liquidation shall also amount to transfer. If we compulsorily acquire any asset, see, if you have any land, okay. If you have any land, I shall not tell you, but this is very personal. You will not believe this. But you know Riddhi madam? Riddhi madam, do you know? Do you know Riddhi madam? Her husband has a big farms of opium in West Bengal. You know, her husband has big acres of farms of opium in West Bengal. One day, Mamta Didi of Bengal decided, Kaka Chichi, we will not give, we will not tolerate. Mamta Didi said, no, we will not let you have this opium farms. She compulsorily acquired. You are not aware. Riddhi madam will never tell you. She will never admit as well. But her husband had opium farms in West Bengal, and those were compulsorily acquired. Provision says if you have any asset which is being compulsorily acquired, now that shall also amount to transfer. Her husband had farms of opium. Arey, why do you think that she is teaching? She is converting her husband's black money into white money. You are not able to understand. If you have any asset which has been compulsorily acquired under any law, it shall amount to transfer. Then, if you convert any capital asset into stock in trade, for example, you have a piece of land. You have been continuing to hold that piece of land from very long time. And right now, you think you or yourself as a dealer. You converted that land into stock in trade, developed houses, and started selling the house. Provision says conversion into stock in trade shall also amount to transfer. We have to discuss this point later on. Now, we have a point which is allowing possession of immovable property in part performance of a contract. This is very beautiful, a real life relevant point. For example, one day I decided to sell my house to Soumya. I have no vested interest in staying. What I thought, what do I do of living? Just give my house to Soumya. I just wanted to give my house to Soumya. Riddhi madam waiting for her power fest to start. You don't know. Don't tell this to her now, but it is only way of converting her black money into white money. She has abundance of black money. She has abundance of black money. I mean, not her, but her husband. It's her way of converting black into white. You will not understand. You are not able to understand. Listen. Now it is very important. One day I decided to give my entire property to Soumya. I decided to give entire property to Soumya. But we made an agreement. Soumya, I have given my house to her. I have given entire keys to her, and she has just given me 1 lakh rupees. She is not remitting the money. She is not getting the registry done. Registry is not done. Registration is not done in her name. But I have handed over the keys and she has just given me 1 lakh rupees in return. We have done the agreement that we will do the registration after 10 years. She will do the payment after 10 years. Are you getting? I have a house. I have handed over this house to Soumya. She has just given me 1 lakh rupees in return. No registration done, no payment done. Provision says this shall also amount to transfer. If you hand over your house property or if you hand over any more property to somebody and you have got something in return, whether registration done or not, whether any payment received or not, it shall amount to transfer. Very important point from real life point of view. I'm telling, if you have any property you hand over to somebody and you receive money in return, it shall amount to transfer. It shall amount to transfer, whether registration done or not. Done, sir. Done, sir. Next point is any transaction which has effect of enabling the enjoyment of involved property. What does this mean? Understand this point very carefully. See, right now, when you have a house, if you stay in a house, it is more likely that registration would be in your name. Correct. In your name, your parents' name, somebody's name would be there in the registry. But when you buy a house in a housing society, housing cooperative society, if you buy a house now, registration is not done in your name. Entire registry is done in the name of society. And you get a membership certificate of the society. Based on that membership certificate, now you tend to have a right to stay. You can sell that membership certificate to anybody else, and that other person will have right to stay in the society. But in municipal documents, the owner shall remain with society only. Ownership shall remain with society only. It is the members that change and membership certificate that transfer to each other. Now, in that case, what happens? Provision says if you have any membership certificate which lets you enable the enjoyment of an immovable property. If you have any membership certificate of a society through which you can stay in that society, if you transfer that membership certificate, now that shall also amount to transfer. If you sell that membership certificate, that shall also amount to transfer. And at last, if you have any zero coupon bond which is being redeemed, it shall also amount to transfer. So what did I say? What did I say? Any sale, any exchange, any relinquishment, any extinguishment, any conversion, any compulsory acquisition, any handing over of possession, any transaction which has impact of enabling the enjoyment of immovable property, and any redemption of zero coupon bond, all shall amount to transfer. In addition to that, for example, if you have an asset and that is being destroyed, if you have an asset and that has been destroyed by the destroyed because of some reasons, natural calamity, Iran war, whatever it is, if you have any asset is being destroyed and you receive compensation, provision says destruction shall also amount to transfer. If you are a partnership firm, if you hand over any assets to partner, or a partner hand over assets to partnership firm, in both the cases it shall amount to transfer. If company distributes assets at the time of liquidation, it shall also amount to transfer. Liquidation shall also amount to transfer. If any company does the buyback shall also amount to transfer. If you do any slump sale, it shall also amount to transfer. Provision says, listen. If you dispose of any asset, it shall amount to transfer. If you part any assets, for example, you have any properties, you have a house, and first floor of the house has been sold to somebody else. Provision says parting and then selling shall also amount to transfer. Creation of interest shall also amount to transfer. Sir, for example, I have a house and I gave this house to Dia for 200 years of lease. That shall also amount to transfer. Whether done directly, indirectly, conditionally, unconditionally, via agreement or not, everything shall amount to transfer. Do we need to understand this definition more? Right answer is clear cut no. Clear cut no. Not beyond this. Whatever I have told you now is more than sufficient. Types of capital assets. Listen very carefully. As of now, we have two kinds of capital assets. Wow. We have two kinds of capital assets. First of all is long-term capital assets. The other one is short-term capital assets. long-term capital assets, short-term capital assets. And the best part is, if you sell any long-term capital assets, you will have long-term capital gain. If you sell any short-term capital assets, you will get short-term capital gain. Wow. Is this thumb rule? Right answer is it might change in some cases, but you need to learn this basics. Long-term capital assets, long-term capital gain. Short-term capital assets, short-term capital gain. Done, sir. Wow. What a logic. What a point. The point is, when an asset is considered as long-term capital asset and when it is considered as short-term. When an asset is considered as long-term and when it is considered as short-term, for that matter, we need to understand the concept of period of holding. Period of holding has to be understood very carefully. Now, what does that mean? What does that mean? See, if an asset is held for a specified period, it shall become long-term. If it is held for less than that specified period, it shall become short-term. Done, sir? What is the period of holding going on right now? See, if you have any listed securities on recognized stock exchange, if you have any listed securities on recognized stock exchange, if you have any equity oriented mutual funds, if you have any zero coupon bonds, or if you have units of Unit Trust of India, all these are to be held for more than 1 year. If these securities, if these assets are held for more than 1 year, they shall become long term. If they are held for less than 1 year or for 1 year as well, they shall become short term. Any other asset, any other asset, property, gold, unlisted shares, unlisted bonds, unlisted debentures, anything extra, whatever you have, anything extra you have, that have to be held for 2 years. So don't you think you are doing overacting a lot? Don't you think you are doing overacting a lot? Arey Baba, you have to sit for 4 years. You will not be able to tolerate me if I don't do overacting. Okay, you will not be able to tolerate me. I know. Sir, any other assets has to be held for more than 2 years. See, remember, it is not 2 years, it is more than 2 years. If you hold them for 2 years, now it shall become short term. Got it? Got it, G, got it, got it, G, got it, got it, G, got it. Now, if you have really got it, if you have really got it, answer my questions. Let's see how many of you are able to answer. 2 years, 2 years, 2 years. 4 hours, not 4 hours. Monica, it has already been 3.5 hours, 3 hours, 15 minutes you have been sitting. Just 45 minutes more. Did you feel like 4 hours? Did you feel like 4 hours? It has already been for 3 hours, 20 minutes we have been sitting. Just 45 minutes more. It will never feel like 4 hours in this class. I can assure that entire DT will go so smooth now that you will not even feel like how much hours you have been sitting. Okay. Acha, 4 hours overacting. You said 4 years. Oh, sorry. 4 years, nahi, 4 hours of overacting. 4 hours of overacting. Now, G, listen. The way you have answered for capital asset, you all answered for capital assets now. You all answered for capital assets. Whether it will be a capital assets or not. Yes. Yes. Now you all have to answer how much period of holding such assets should be held to make it long term. How much period of holding should be checked to make it long term? 1 year, 2 year, how much it should be checked? For example, I am answering this. If you have any gold is a kind of any other assets. For this, we have to check 2 years of period of holding. If I hold gold for 2 years, it shall become long term. More than 2 years, it shall become long term. Less than 2 years, it shall become short term. Now, answer like this. If you hold shares of Reliance like this, you have to answer. If you hold the shares of Reliance, how much period of holding should be held? How much period it should be held? Reliance shares, how long it should be held to make it long term? Soumya, Monica, and Satish, Jayashri all say 1 year. Okay. I'm not answering. I'll answer at last. Now answer this. If I have shares of Facebook, how long these should be held? How long these should be held? Monica says 2 years. Soumya says 1 year. Okay. Now here we have divided opinion. Okay. The more you divide, the more I'll enjoy. Don't worry. The more you get divided, the more I'll enjoy. How long Facebook shares to be held to make it long term? Dia says 1 year. Okay. Jayashri says 1 year. Okay. For 1 year, we have multiple answers, but for 2 years, we have only Monica. Satish says 2 years. Okay. Satish says 2 years. Okay. Satish and Monica for 2 years, other for 1 year. Now, if I have debt-oriented mutual fund, debt-oriented mutual fund, debt-oriented mutual fund, how long this should be held to make it long term? Right, like this, 4 point something. If you have any debt-oriented mutual fund, how long this should be held? How long debt-oriented mutual fund should be held to make it long term? 1 year, 2 year. Soumya says 2 years. Monica says 1 year. Sorry, Monica changed her answer to 2. Monica. Always STCG. Always STCG. Right answer is no. No, Satish. Jayashri says 1 year. Satish, always STCG. I will note this and I will correct you. Okay? This is what you have said. I will correct this. Okay? Now answer this. If you hold a business, if you have business, how long this business shall be held to make it long term? How long a business shall be held to make it long term? Soumya says 3. Dia says 2. Jayashri says 2. What other people are doing? They have curd in their mouth or mehendi in their hands. Why other people are not typing? Satish says 2. We have Monica saying 3. Okay. If I have a units of business trust, units of business trust. If you have business trust units, I have not told you whether they are listed or not. I have not told you they are listed or not. There is a presumption behind the units of business trust, whether they are listed or not. Okay? There is a presumption. Beautiful. Monica says 1 year. Jayashri says 1 year. Soumya says 1 year. Satish says 1 year. Oh, can I say I love you? Can I say I love you to all of you? Then we have building. Try answering the 7th one. If you have any building, how long this building shall be held to make it long term? How long this building shall be held to make it long term? How long this building shall be held to make it long term? Dia says 2 years. Jayashri says 2 years. Monica says 2 years. Satish says 2 years. Okay, nice. Beautiful. Now, point number 8. We have rural agriculture land. Rural agriculture land. How long this should be held to make it long term? How long this should be held to make it long term? Soumya says, no, I am not going to answer. No answer. Monica also says I am not going to answer. Dia also says I am not going to answer. Satish, oh, ho, 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 beautiful, 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 very nice, everybody. Okay. Point number 9. If you have Motilal Oswal Nifty 50 mutual funds, Motilal Oswal Nifty 50 mutual funds, how long this should be held to make it long term? How long this should be held to make it long term? If you have Motilal Oswal Nifty 50 mutual fund, how long this should be held to make it long term? Right, like this. Point number 9. Soumya says 1. Jayashri says 1. Monica says 1. Dia says 1. And Satish also says 1. Wow, very nice. Now we have Rahul Limited shares. Rahul Limited is me. Rahul Limited shares listed on Chennai Stock Exchange. How long this should be held? How long this should be held to make it long term? Right, like this. 10th. How long Rahul Limited share should be held to make it long term? Monica says 1. Dia says 2. Satish says 1. Satish says 1. Aage. Other people. Acha, sabne all have given answer. I have been late in reading. Sorry. Soumya says 1. Dia says 1. Satish says 1. Everybody has said 1. Only I missed out. Somebody's on the Jayashri also said 1. Okay. The last point, unlisted mutual funds of Motilal Oswal Nifty 50 plus mutual fund. Nifty next 50 mutual fund, whatever you understand. Unlisted mutual fund of Motilal Oswal Nifty next 50 mutual fund. How long this should be held? Right, like this, 11 point something. Motilal Oswal unlisted mutual funds. Nifty next 50. Soumya says 1 year. Monica says 2 year. Oh my god. Jayashri says 2 years. Dia says 2 years. Satish says 2 years. Oh my god. There isn't a single answer in which everybody is united. And we are not studying something very tricky topic. We are understanding period of holding, the essence of income tax, the essence we are studying, and we are not getting a united answer. Believe me. This is not something we are studying very difficult topic assessment and our taxation. No. This is the period of holding we are studying. Let's see. Sir, gold directly has to be checked for 2 year of period of holding. Everybody is correct in this case. Everybody says we have already discussed. If we have Reliance shares, sir, Reliance is listed on recognized stock exchange. Therefore, it has to be checked for 1 year. That means everybody that have given the answer is correct. If you hold shares of Facebook, sir, 4 securities are to be checked for 1 year. Listed equity shares, equity oriented mutual funds, units of business trust, and UTI units. Whether Facebooks are listed, sir, Facebook shares are listed, but recognized stock exchange, not on recognized stock exchange. Recognized stock exchange are only 2. Bombay Stock Exchange and National Stock Exchange. Rest all are not recognized. Only 2 are recognized, Bombay Stock Exchange and National Stock Exchange. Facebook is listed on New York Stock Exchange. Sir, it is unlisted as per India. It is unlisted or listed not on recognized. So 2 years period of holding has to be checked. Right answer would be 2. Got it. Debt-oriented mutual funds. Sir, debt-oriented mutual funds are not listed. It is assumed that they are not listed. By default, they are not listed. They are not listed. They are not equity-oriented mutual fund. They are not units of UTI. They are not business trust unit. Therefore, they should be checked for 2 years. Now, here was the point. Very logical point. Satish says that whenever you have debt-oriented mutual fund, it will always be short-term. Right answer is no. It is incorrect to state that. Okay? Why am I saying that? Always short-term capital gain will happen in case of 50 AA. Okay? Just for the reference, I am telling 50 AA are those mutual fund in which more than 65% of the money is into debt. Correct. That is specified mutual fund, and on those specified mutual fund, you will have always short-term capital gain. But what is a debt-oriented mutual fund? Debt-oriented mutual fund is a mutual fund where less than, or I should say, less than 65% of the money is invested in equity shares. Okay, if more than 65% is in the equity shares, it is equity oriented. But if less than 65%, it is not equity oriented, it can be debt oriented as well. So there is a small gap between being a debt oriented and being a specified mutual fund. Debt oriented is a bigger term, specified mutual fund is a smaller term. Specified mutual fund will have short term capital gain, debt oriented might have long term capital gain as well. Okay? So 2 years period of holding for debt oriented. Business, sir, if you have any business now, if you have any business, business is governed under section 50B. We will discuss this tomorrow, most probably tomorrow. Whenever you sell any business now, you have to check for 3 years of period of holding. Section 50B explicitly states that unit is to be held for at least 2 years. Sorry, unit is to be held for at least 3 years to make it long term. If you hold it anyway lesser than that, it shall be short term. So every answer except for, I guess, Soumya and Monica is correct. Otherwise, every answer is wrong. Units of business trust. See, by default, units of businesses are listed. Meaning of business trust is only that it is listed on recognized stock exchange. Therefore, if you have any units of businesses, it is listed, and on that 1 year of period of holding is to be checked. Building, no strings attached, everybody is correct. 2 years is to be checked. Rural agriculture land, everybody is correct because it is not a capital asset. We have studied that point. Motilal Oswal Nifty 50 mutual fund, it is equity oriented. Therefore, it shall be 1 year of period of holding. Got it. Rahul Limited shares on Chennai Stock Exchange. So Chennai Stock Exchange is not recognized stock exchange. Therefore, 1 year of period of holding shall not be allowed in this case. It has to be held for at least 2 years to become long term. Therefore, every answer in this case is wrong except for Dia. Unlisted mutual fund. Unlisted mutual fund. Sir, if you remember, listed equity shares, 1 year period of holding. Equity oriented mutual fund, 1 year period of holding. Business trust, 1 year period of holding. UTI units, 1 year of period of holding. For every other assets, 2 year of period of holding. While checking equity oriented mutual funds, do we have to check whether they are listed or not? Do we have to check they are listed or not? Right answer is no, sir. For shares, we have to check listed, but for mutual fund would work anyway. Any mutual fund would work. It should be equity oriented. Any mutual fund would work, and it shall become long term if we held them for more than 1 year. Therefore, again, entire answer is wrong except for Soumya. How was it? How was your experience understanding the period of holding concept at the CA final level in this power batch? I know you must have studied this somewhere else as well, but the fact is, I'm sure that you must have not studied in this manner. Done, sir. Come on to the chart where we stand right now. Come on to chart. Sir, we started off with charging section. We understood what is the meaning of charging section. We have 5 meanings. Any gain arising from transfer of capital asset shall be taxable. Under that capital gain in the year in which transfer took place. We came on to capital asset. Any asset is a capital asset. 4 exclusions, securities by FII and ULIPs. We came on to definition of transfer. Please explain again equity oriented mutual fund. Wait a second. I have not even taught the meaning of equity oriented mutual funds. Monica, I'm yet to tell. Most probably tomorrow or day after tomorrow we will understand that. What is rural agriculture land? We understood. And what is the period of holding concept? We understood that. See, Monica, what my point is, try understanding that. When you study period of holding, it is said that listed equity shares are to be held for more than 1 year. Equity-oriented mutual funds are to be held for more than 1 year. Zero coupon bond and units of UTI are to be held for more than 1 year. Okay. While reading this equity-oriented mutual fund, is it anywhere mentioned that these units are to be listed? Anywhere mentioned that these are to be listed? Anywhere it is mentioned, kya? That means can unlisted equity-oriented mutual fund be held for 1 year? Yes, it can be held for 1 year and it will become long term. Sir, what is equity-oriented mutual fund? We are yet to discuss that. I'm just telling you in brief, we have a detailed meaning. But if you are a mutual fund and if you have 100 rupees to invest, so if 65% of the money are invested in listed equity shares of a domestic company, then you are equity oriented mutual fund. I'm telling you in brief. Again, we have to discuss. If you are a mutual fund in which you have 100 rupees, and out of this 100 rupees 65% money is invested in listed equity shares of a domestic company, in that case it would be considered as equity oriented. We have a deeper meaning to that, but this is the basic idea. Come on to next point. Come on to next point. Come on to next point. That is computation portion. How do we compute capital gain? How do we compute capital gain? Listen, if I have a calculator, bought at rupees 100 and sold it for 200. Sir, what is the amount of capital gain? 200 minus 100. Sales price minus cost price. Yes, yes. That is how you compute capital gain. Sales minus cost. Yes, that is the only essence. That is only what is said here. Whenever you have an asset which is being sold off, whenever you have any asset which is being sold off, just take the full value of consideration, reduce any kind of transfer expenses like any brokerage commission paid. This will give you net consideration. Reduce cost of acquisition from this, reduce cost of improvement from this, and this will give you short-term, long-term capital gain. Depending upon period of holding, you would get the short-term, long-term capital gain. On this, you would get exemption from 54 to 54F, whatever the exemptions you have claimed now, you would get here. After exemption, whatever the number turns out to be, now this would be taxable capital gain, and on this taxable capital gain, tax rate would be applicable. So this format has to be religiously followed whenever you are solving capital gain. Religiously follow this format, your answer will never be wrong. Sir, got it. In this entire process, in this entire computation, now we need to calculate only two things. Sir, how do we calculate full value of consideration and how do we calculate cost of acquisition? Once we are able to understand that, our entire computation portion would be done. We have to understand how do we calculate capital gain. We have understood the format. We need to know what is full value of consideration, what is cost of acquisition. Now, how do we calculate full value of consideration? Try understanding. Ideally, when you sell any asset or when you transfer any asset, whatever the money that is received or due to be received, it is nothing but full value of consideration. If I have a house and if I sell that house for 2 crore rupees, 2 crore will be FEOC. If I'm yet to receive 2 crore, 2 crore would be FEOC. So whatever money is received or receivable, that shall become full value of consideration. Very basic, very basic. But there are three special cases. In case of immovable property, in case of unlisted shares, and in case of any other assets, we have special cases. What are those special cases? Government is very serious in respect of immovable property. For that matter, it has introduced section 50C. What does the 50C says? There will be a stamp duty value of a house. There will be a stamp duty value of a house, and below that stamp duty value, you cannot sell very lower. That means provision says if stamp duty value exceeds 110% of consideration, now we will disregard your consideration. We will take stamp duty value as full value of consideration. For example, if you have a house, whose stamp duty value is 11 lakh rupees, okay, or I should say 12 lakh rupees. If you have a house of 12 lakh rupees stamp duty, and you sold that house for 10 lakh rupees, why did you sell it at lower price? Why did you sell it at lower price? Because you want to avoid capital gain taxes. Provision says if your stamp duty value exceeds 110% of sales. What is 110% of sales into 1.11 lakh? If your stamp duty value is more than 110% of sales now, in that case, we will disregard your sales. We would take SDV as full value of consideration. SDV shall become full value of consideration. Got it? If stamp duty value exceeds 110% of consideration, we will ignore the consideration. We will take the stamp duty value as full value of consideration. But what if, sir, SDV is lesser than 110%? For example, we sold house for 10 lakh rupees and SDV is 10.5 lakh. In that case, actual sales price would become full value of consideration. Sir, is it possible that we are not satisfied with SDV? Is it possible that we are not satisfied with the SDV? Right answer is yes, it is possible. For example, we have with us Monica. Monica, yes, Monica. We have with us Monica. Now, Monica has a house. whose house SDV is 5 crore rupees. But you know what? That house is haunted. That house is haunted. And Monica is not able to sell that house for more than 1 crore. Monica is not able to sell for more than 1 crore. Even though being a very premium apartment, she is not able to sell that house for more than 1 crore because it is haunted. Doesn't Monica have any option? Does she have any option for reduced SDV? Right answer is yes. Monica can request to assessing officer. Assessing officer will refer the case to valuation officer, and valuation officer will identify what is the SDV. Got it? Valuation officer would come and visit the house. If he is satisfied that really the house is haunted, really the house is haunted, if he really feel that house is haunted, oh my god, can he reduce the SDV? Right answer is yes, he can reduce the SDV. For example, valuation officer reduced the SDV to 2 crore rupees. Can Monica accept it? Right answer is yes, she has no other option to accept but to accept. So if case has been referred to valuation officer and valuation officer reduces the SDV, then you can take the reduced SDV. But what if the valuation officer had different kind of fantasies altogether? As soon as he entered the house, there was a witch in safed sari, white sari, open hair, blood in her hair, very broad smile with white teeth, lying in the house. All of a sudden, assessing officer, valuation officer was so attracted to that witch that he felt like all the experiences that one can get in Thailand is available in this house. All the kind of experiences that you can have in Phuket is available in this house. 5 crore SDV does not justify this house. This house is worth more. Valuation officer is so satisfied with the witch, he's so happy with the witch that he thinks that SDV should be 10 crore rupees. Valuation officer thinks that SDV should be more. Are you getting this point? Valuation officer thinks that 5 crore is not justified for the beauty that you are getting with the house. SDV should be higher. So valuation officer increase the SDV. Valuation officer increase the SDV. Now, can you take the increased SDV? Provision says in that case you have to ignore this SDV. You have to ignore this SDV. Did you get this point? Did you get this point? See, if you are not satisfied with the SDV, you can go to valuation officer. If he determines SDV lower one, na take the lower one. If he determines the higher one, ignore. Got it? Bottom line clear to you. Everything apart from example is just to make you remember that if he increases the SDV, na ignore. If he reduces the SDV, take the lower one. Now, yes sir, clear. Now we have another example. Listen very carefully, very carefully. For example, this is Rahul and Satish. Rahul is seller and Satish is buyer. Rahul is seller and Satish is buyer. Okay. I want to sell this house to Satish. Wow. I want to sell my house to Satish. He's a buyer. We did an agreement on 1st April 2025. Agreement to sell for rupees 1 crore rupees on that same day SDV was 1 crore rupees. But later on, when we were about to make, see, Satish is very lazy person, you know. Whenever I used to ask Satish, can we do the registration? He says, sir, wait a minute. We'll do later on. ऐसा करते करते he was always denying. It was the historic date of 1st October 2025. After 6 months, he agreed to do the registration. After 6 months, on that day, SDV turned out to be 1.2 crore rupees. Oh my God! Oh my God! Now just consider this. When I sold the house for Rahul, capital gain would be arising in my hands. Capital gain would be arising in my hands because I am the person who sold the house. Full value of consideration. I sold the house for 1 crore rupees. SDV on the date of agreement was 1 crore. But SDV on the date of registration was 1.2 crore rupees. If I take the agreement date SDV, I am absolutely good. I am absolutely human person. But If SDV has to be taken on the date of registration, then I have done a very bad aparadh. I have done a sin. Which SDV should I take? Point left to you all. Which SDV should I be taking? Which SDV should I be taking? Point open to all of you. Provision says, which SDV should you be taking? Provision says it is dependent upon a single factor. Whether on the date of agreement, I received money via account paycheck, demand draft, or electronic clearing system. If on the date of agreement I have received a single rupee via account paycheck, demand draft, electronic clearing system from Satish, provision says take the SDV on the date of agreement. But if you have not received money via account paycheck, demand draft, electronic clearing system on agreement date, take the SDV of registration date. That means SDV is dependent upon the payment date. If we have received money via account paycheck, not in cash, not in cross check, not in bearer check, but if we have received the money now, we shall take SDV. We shall take SDV on the if you have received the money on the agreement date, now we will take SDV of agreement date. If you have not received money, we will take the SDV on registration date. Got it? Or received money in cash, you will take on registration date. Got it? This is about 50C. See, normally, whenever we are selling anything now, take the money received. Take the money received. But in case of immovable property, we cannot take money. We cannot take money. Sometimes money is very less, but SDV is higher. So if you have to check SDV exceeds 110% of consideration, so take SDV. If you are not satisfied with SDV, go to valuation officer. He might increase, he might decrease. If he decreases, take the lower one. If he increases because he's so satisfied with the house, then ignore that. Which SDV to be taken on the registration date or on the agreement date? Provision says ideally you should be taking the date in which you received the money. If you received the money via account paycheck, demand draft, electronic clearing system on agreement date, take agreements SDV. If not, then take registrations SDV. Sir, what if you sell unquoted shares? See, unquoted shares are more likely to be mutilated. I mean, most often you will see some kind of fraud happening in unlisted shares because fair market value is not known. So in these shares, in these assets, provision says if you sell any unlisted shares now, full value of consideration shall be taken off higher of 2. Full value of consideration shall be taken as FMV or sales price, whichever is higher. Sales price is the price that which you sell. FMV is nothing but FMV based on the valuation report of a merchant banker or a chartered accountant. Merchant banker, chartered accountant is supposed to find out the FMV. You should sell at least at that FMV or at the sales price, whichever is higher. That shall be considered as full value of consideration. But sir, there is an exception. If I have unlisted shares of a company whose board of director has been suspended by central government, it is a very bad company, poor company, chi wali, athu wali company, very bad company. If you have a company whose board of director has been suspended by the central government, suspended, see, board of director of a company suspended. Can you believe? If you sell that company, in that case, this higher rule will not apply. Actual sales price shall only apply. Actual sales price shall be considered as full value of consideration. Done, sir. Section 50D, the thing in which sales price is not determinable. For example, one day I was going to beach. I was walking. I said tick 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 tick. I was walking without sandals, without Crocs, without any slippers. I was walking. There was a nail below my leg. I felt very bad, very sad, very bad, very sad, very bad, very sad, very bad. I was feeling. But all of a sudden, when I looked at the thing, I found a gold necklace. I found a gold necklace. It was a lottery to me. Just a small pain, but a gold necklace I found. Can you believe it? No, you'll not believe it. I know you'll not believe it. You will not believe it. I have a gold necklace. And today I'm in class, I'm announcing if anybody scores 80 plus marks in class in DT, I will give this gold necklace at just 500 rupees to that person. At just 500 rupees to that person, I will give this gold necklace to him. If I give this necklace, for example, if Jayashree scores 86 marks in DT, Jayashree scores 86 marks in DT, she just transfers me 500 rupees and I give this gold necklace to her. Wow. Provision says if you sell any asset whose fair market value is not determinable. Really? Wow. If sales price is not determinable, if sales price is not determinable, then you shall take FMV of that assets. If any assets you are transferring whose sales price is not determinable, see, I'm just giving away that asset for 500 rupees. Then AO will do his work and calculate the full value of consideration as FMV. Okay. Really? Monica is asking, really? Jayashree scored 86 marks. And you have given chain gold necklace to her. Arey, very jalan bhav, very वो jealousy wali feeling everybody has. Chief. Come on to next topic, that is cost of acquisition. Okay. Last topic for the day, cost of acquisition. Now, what is cost of acquisition? What is this world? What is this life? Who are you? Who are me? Who is me? Arey Baba, don't get philosophical. What is cost of acquisition? Cost of acquisition is nothing but price paid to acquire the asset. Price paid to acquire the asset. Whatever money you pay to buy an asset now is nothing but cost of acquisition. Okay? Whatever money you pay, whatever money you pay to buy the asset now, that is considered as cost of acquisition. Done, sir. Done, sir. For example, if I buy a machinery, okay? Provision says any direct expenditure incurred to buy that machine shall also be considered as cost. For example, you paid transportation charges to acquire that machinery and get it here. If you have paid any installation charges, that shall also become part of the cost. Whatever the direct costs you incur on acquiring any asset, now that shall become cost of acquisition. But here is a very important catch. If you buy any securities in which you pay security transaction tax, now security transaction tax is never considered as cost of acquisition. It is never considered a part of cost of acquisition. Always remember, securities transaction tax is never considered as cost of acquisition. Done, sir? Clear to everybody? Clear to everybody? Yes, sir. Absolutely clear. Absolutely clear. Done, sir. Done, sir. Done, sir. Two important pointers in considering SDV. Normally, purchase price is the cost of acquisition. Whatever the direct expenses you incur, that is also the cost of acquisition. STT is never considered as cost of acquisition. One important thing I want you all to focus. For example, there was Mr. Satish. There was Mr. Satish. No, Satish, example Satish wala nahi. For example, Mr. Amar. Amar bought a house in 2002 for 30 lakh. Out of the 30 lakh, 10 lakh were self money, 20 lakh were loan. Since 2005, he never paid any installment. No installment paid. No installment paid. He did not pay any money. And later on in 2009, he gifted this property. He gave this property to his son. Say, Mr. Anthony. Okay. His father acquired the property at 20 lakh, 30 lakh rupees, but he did not pay the installment and gifted this money to his son Anthony. Now his son Anthony, to get the title of the asset, now, he had to pay the loan amount of 20 lakh rupees. In addition to that, he had to pay 5 lakh rupees as a penal interest because his father has not paid money for 5 years. Now, for 4 years, his father didn't pay any money. So he had to pay a penal amount on this 5 lakh rupees as well. My question to all of you is whether this 5 lakh rupees would be added to cost for Mr. Anthony or not. My question to all of you. See, your entire DT subject now would be based on these intellectual questions. The more beautifully you would answer now, the more beautiful level I would take. But if you don't participate, I would have to answer this and move forward. Okay, so your answer, participation is important. What did I say? I received a property. To acquire that property now, to acquire the clear title of the property, I have to pay some penal charges, penalty charges that my father was due. Can I take this 5 lakh rupees as my cost of acquisition? Can I take as a cost of acquisition or cost of improvement, whatever you think? Can I take it? Can I take it? Satish says no. Dia says yes. Monica says yes. Here we are divided. Right answer is if it is mandatory to be paid to obtain the clear title of the asset, then it is added. It is added to cost. And it is not me who is saying, but ICI in its question has asked this point. ICI in few questions have asked this point, raised this point. It's not me who is saying that, but ICI has been saying this. So the first thing that I am discussing here is include amount paid for obtaining clear title of the property. If you have any property whose clear title is to be obtained, even if you are paying penal charges, if you are paying penalties, interest, it is added to cost of asset, irrespective whether it is penalty or not. It is added to cost of asset because it is necessary to be paid. It is necessary to be paid to obtain the clear title. Sir, sometimes it happens. Same example. Same example. For example, this is Satish. Satish bought a house for 30 lakh rupees. Out of this 30 lakh, 10 lakh was self money or 20 lakh rupees was loan. Every year, 4 lakh of EMI was made, and out of this 4 lakh, 3 lakh was interest and 1 lakh was principal. Of course, towards the end of the payment, this 20 lakh loan, out of this 20 lakh loan, Satish must have paid nearly 35 lakh because 15 lakh interest would also accrue. Of course, whenever you take loan, you have to pay the interest component also. Do you get deduction of this interest component? The clear cut answer is yes. Whenever you pay any sum, whenever you buy any property on loan now, you are allowed deduction of interest as well. Interest deduction is allowed as cost of improvement. This is allowed. Whatever interest you pay now on any loan to acquire any property, that interest deduction is allowed to you as cost of improvement. In practical life, it is allowed. It is improvement only that you are doing now, so it is allowed. Normally, department allows that. Whatever interest that you are paying for the loan on taken is allowed as cost of improvement. But here comes an important catch. Department is very clear in this point that if you have taken deduction of this interest under 24B, you remember 24B? You remember 24B? 24B is a section where if you have any house property, let out house property or self-occupied house property, sir, whenever you have any self-occupied house property, on the self-occupied house property, if you pay interest on loan, so you get a deduction of 2 lakh rupees. You remember, this is a section, this is a section in CA Inter, not at final. But if you have any house property, it is a let out house property, self-occupied house property. If you pay interest on loan, you get a deduction of 2 lakh rupees, yes. If you remember, you get deduction of 2 lakh rupees. This is not, I am assuming it is available. In addition to that, you get deduction of interest under section 80 double E and double EA. Of course, we will study the sections when we will study capital gain. Sorry, we will study deductions. And principal portion deduction you get under ATC. Department is very clear on this term, very clear on this term, that if any deduction is taken under any head of income, under any chapter of Income Tax Act, you will not be allowed to claim such expenditure as cost of acquisition or cost of improvement. If you have claimed a deduction of this interest under 24B, under house property head, if you claimed this deduction under 80EE and EEA, under chapter 6A, if you claimed this principal under 80C, under principal repayment, provision says you will not be allowed to reduce that from, or you will not be allowed as such interest as cost of acquisition, or such interest or principal as cost of improvement. This is what the point is. Cost of acquisition of the house property shall not include any interest where deduction is already allowed, deduction is already claimed under 24B and chapter 6A. If you have taken deduction of interest or principal under any head of the income under 24B, under chapter 6A, you cannot claim such interest, such principal under cost of acquisition. Got it, sir? Got it? So what did I say? What is meant by cost of acquisition? What is meant by cost of acquisition? Remember, price paid to acquire the asset plus direct expenses, but no STT. Price paid to acquire asset, direct expenses, no STT. In addition to that, price paid to obtain the clear title, and any expenditure incurred whose deduction has been claimed under any of the other head, such expenditure shall not be allowed as cost of acquisition. Done, sir? Some special cases. See, ideally, whenever you buy any asset, now then purchase price shall be considered as cost of acquisition. Whatever purchase price you take shall be considered as cost of acquisition. But there are certain exceptions to that. There are certain special cases. We will study only a few and then we'll end the class. Don't worry. We will study only 2 or 3 and then we'll end the class. First of all, for example, my sister has acquired a house for 10 lakh rupees. My sister has acquired the house for 10 lakh rupees. And this house has been gifted to me. And I sold this house for 20 lakh rupees. So for me, cost of acquisition should become 0 because I have not paid any money. Provision says no. If you have got any asset on account of exempt transfer, then cost of acquisition of the previous owner shall be taken. If I have got a house on account of exempt transfer, then cost of acquisition of previous owner shall be taken. Are you getting what we are studying? Sir, the point is, ideally, whenever you pay any sum to acquire the asset, that is considered as cost of acquisition. But in case of these assets, for example, in case of exempt transfer, in case of an exempt transfer, I have not paid anything now, so take cost of acquisition of the previous owner. Okay, sir, got it. Got it, sir, got it, sir, got it. Got it, sir. Now, if you have acquired any asset before 1st April 2001, beautiful. If you have acquired any asset before 1st April 2001, if you have acquired any asset before 1st April 2001, then cost of acquisition shall be taken as higher of cost or FMV. Purchase price or FMV as on 1st April 2001, whichever is higher. For example, I have gold purchased in 1950s. I must have bought for 2 or 3 rupees only. Or say 500 rupees a kg gold. At that time, rate was this only, na? 100, 200 rupees kg gold was available. Right now, we have 1 crore worth. But at that time, it was 100, 200 kg. My great grandmother used to tell me once, not me, but my grandfather, she used to tell that gold was 100 rupees kg, 200 rupees kg at that time, 1950s. If I have gold which has been held since 1950s, don't you think that 100 rupees cost of acquisition would make no sense? For that matter, we have a benefit. Whatever the FMV as on 1st April 2001 is, or purchase prices, whichever is higher shall be allowed to us as cost of acquisition. Then, sir, whichever is higher shall be allowed to us as cost of acquisition. Important point, sir. Important point. Very important point. If you have any intangible asset, for example, I have patent, I have copyright, I have any loom hours, I have any route permits, I have any other intangible assets like right to manufacture, right to any kind of intangible asset. What will be the cost of acquisition of an intangible asset? Sir, I have developed a patent. I have developed, I have not bought a patent, I have developed a patent. Provision says if you have developed any patent now, if it is self-generated, always take it as nil. Always take it as nil. Always take it as nil. If you have any self-generated intangible asset now, it is always zero. Take it zero. But sir, what if it is purchased? Then what to do? Then take the purchase price. Then take the purchase price. If I bought patent for 10 lakh, take 10 lakh. If I bought patent for 20 lakh, take 20 lakh. Done, sir, done, sir, done, sir, done, sir, done, 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 sir. If I have any asset which is a depreciable asset, I bought it for 10 lakh rupees. Okay. WDV right now after depreciation is 6 lakh rupees and I sold this asset for 12 lakh rupees. What will be the cost of acquisition for this depreciable asset? Provision says ideally price paid to acquire should be cost of acquisition. But provision says in case of depreciable asset, it is the WDV that has to be reduced. So the cost of acquisition would be 6 lakh rupees and 6 lakh would be capital gain. So I told you 4 exceptions. Take 4 exceptions I have told you. Ideally, price paid to acquire the asset is the cost of acquisition. But in case of exempt transfer, take the cost of acquisition of previous owner. In case of very old asset before 1st April 2001, then take the cost or FMV, whichever is higher. If you have bought any intangible asset and that has been self-generated, now take nil. If it is acquired, take the purchase price. Fourth thing I have told you is if it is a depreciable asset, take the WDV as cost of acquisition. WDV shall be taken as cost. Reason being, you have already claimed the depreciation. Important point, sir. In case of last point for the day, in case of any intangible asset, if such intangible asset is depreciable, then again we have to take WDV of that. And the best part of all, for every intangible asset, you are not allowed benefit of 1st April 2001. What does it mean? See, ideally, if you have any asset which is very old, before 1st April 2001, you have been holding such asset. Then you get benefit of FMV. On every asset, you get benefit. Every asset, if you sell building, gold, debt-oriented mutual fund, equity shares, anything that whatever you sell, you get benefit of FMV. But in case of intangible assets, you don't get benefit. It is a clearly stated exemption. It is an exception. Why? Simple reason being, how can you calculate? How will you be able to arrive? How will you be able to determine the FMV? Na? Right now, you have difficulty in finding out FMV of properties as well. How will you be able to identify the FMV of intangible asset? So for intangible asset, it is clearly said, if it is depreciable, take WDV. If it is very old, do not take the FMV. Ideally, FMV is allowed in every case, but for intangible asset, it is not allowed. Rest we'll do tomorrow. Bonus, sweat equity shares, demerger, special cases, everything we will do tomorrow. Let me take you to what we have done till this far. If I take you, we understood what does the basic computation is. It is nothing but sales minus cost. We understood 50C, 50CA, 50D. 50C is nothing but in case of immobile property. 50CA is nothing but in case of unlisted shares. And 50D is nothing but that gold wall example we took now. If sales price is not determinable. We have started with cost of acquisition. Intangible asset we understood. Gift we understood. Bonus, ESOP, right, ESOP we have to do. So this is what we did till now. I hope you enjoyed the class. Take it. It was worth something. It was something new, some experience, some knowledge enriching experience. It was along with that fun. Honestly, power batches, I never expect the students to sit for this long, but the people sit. I don't know. There is some magic involved in the subject itself, or there is some magic involved in the morning energy, but people tend to sit for this long. For 4 hours, they never get bored. And this entire income tax will go in this way now that you will never get bored. Okay. So tomorrow at the same time, we will have the same class. What you have to do today is whatever we have studied today, now just recall it. Tomorrow we will recall, of course, but unless you recall it, it is difficult for you to digest. One question I have given you as homework, do solve it. In addition to that, I will share the link for tomorrow's session. If you have any other friend who want to study in this fun learning manner now, do ask him to come as well. Just ask him to come for one day. Share this demo as much as possible. So share this video. Not demo, actually, it is a regular class only. So if share this with as many people as you can and make it reachable to more students. And yes, 65 plus target should be there. Now, last point, please. Just 1 minute, just 1 minute. This is my number, even though it is available on description, in description as well. This is my mobile number in which you will not call. Okay, you will not WhatsApp, you will just do Telegram. Okay, today you have to send the question to me, that question I have asked you to solve, you have to send that to me on Telegram. You will send this to me. In addition to that, if you want me to talk to you, I mean, if you want a telephonic conversation, na, just message me, sir, I want to talk to you. Give your mobile number and give a missed call. Okay, just give a missed call, I will call you back. I will call you back, don't worry at all. Okay, if you have any doubt in any of the topic, I'm just a message away. If you have any doubt as with respect to batch, how we are going to proceed, this was it. You have 4 more days to decide. Whatever you decide now, that will be for your benefit only. See you guys tomorrow with same energy, excitement, enthusiasm. Bye bye. Have a great day studying.